Morning, morning. Hmm. Come on. I'm over 3 on cock today. Morning, CL. Yeah, I see that IFBD. I'm gonna fill that. Mm, not a good look. Come on. Back to break even. Yeah. Damn. Oh, I missed it. Wow, that's all the way back up. Oh no, it's not. Oh no, it's not going. There it goes. See, money. I had a red day yesterday. Any sort of trade journal? No, I don't. I try to forget about the red days or green days for that matter. The closest thing I'll do for a trade journal is I will look at what stock beat me up the day before or the day of. I don't keep track of how much I made or whatever. I try to forget all that because it'll affect my trading the next day. And I need to go into each day with a clear mindset. Oh, jeez. Come on. Nope. Okay. Really cool that PLTR got that Titan contract. Damn it. Sell. Wow, this thing is clunky right now. Platform got slow really quick. Pal speaks today? Oh, PLTR went frickin' A. Such a good trade. Got out early. Dang it. JL. Yeah, I don't know what this thing's deal is. This is the second day of the cock after this, whatever the hell that is. It's certainly a lot thicker trading wise than it was here. My next I'm looking at. It's in a van. That guy's crazy. Dude, the fire's pumping out of the front of that stove. What an idiot. You're supposed to hold up when I dip by. All right. 5 minute cock. Ethan hit from mom's house. Come on. So slow. Oh. No. But they are high day. Damn. Is there news on this? Financials. AISP trying to do a 5-minute. PHGE. Soon Daily's getting close. More happy. 15 streak. Let's go, homie. ASP 5 minutes 760. That. Whoa. Oh, that fell. Suck me sideways. I really wish there was a sell on the ask button. Freaking so annoying. I know they do. Shut up, Neon Tiger. Ban yourself. Going again. The heck is going on with this sucker? Yeah, the merger agreement. Oh, that's yeah. Well played, Soils. Dude, video is just disgusting. Whoa. Egypt raised rates by 600 basis points. That would suck. Should I buy for? What do you got now? How has Bitcoin reclaimed all this ground, but other coins just drag behind? Well, that's typically what happens. Bitcoin leads the move, but most coins that were up, all the alts, they're still up. Also, this is going to be pretty typical in Bitcoin world. I am not surprised one bit that we held this support area and that we bounced from there. We saw the same kind of thing instead of a minute chart or an hourly chart. It was a daily chart. When the ETFs rolled out, we saw a big move up. I mean, I could probably find it. I can't, I don't know the actual date. Might have been this. Probably, I don't know. I can't remember. But it looks something like this. Big move up for ETFs, sell all the news, and then go. Same thing kind of happened with Bitcoin. All-time high, sell the news, back bounce off support. We're going to see that quite often in the next few months. AISP. There it goes. Damn it. I did buy it. I bought it at 96 average, whatever, 90, yeah, 96. Sold half at 99 and the other half 813. No, Jake, I don't have Bitcoin. I don't have any Bitcoin this round. Oh, of course, the first 1 minute cock that actually works on this thing. Son of a. But I have been playing like the miners and the stocks related to crypto. I have ETH this round, not a lot. My average on ETH is about 2K or just under it. What's a dun peel hunter? Okay. Whoa. This is new. Look at all the orders going through on the L2. Oh, you can't see that. Or the time in sales. Holy shit. So all the stuff that's going on through here is going on the time in sales. That's new. Oh, come on. Don't tell me this thing's gonna move on that shit news. NASCAR, what's going on, man? MSTR. Get more of that Bitcoin goodness, huh? BHC. Oh, STRC. I can't believe this is moving on Merger News. Meds announcing cash dividend. Holy shit. How much? Oof. $35. Oh, gosh. I don't know, man. Got to go cuck now. Yeah, it's thin. The rest $100. See if that comes back up to 12. There it goes. So many sellers. I don't know. Or the shot, but now it probably goes to about. So many sellers here. There There it goes. Yep. See, as soon as I got up. As soon as I got out. Yeah, that PHE is going stupid, man.
1 year older and hopefully wiser after watching you this long.
Screnlin, thank you for the how many months? 1 year. Let's go, bud. I took the soon of the hourly chart. There's like a W potential here. You're doing an hourly cock right now. You break this 523, could do well. That's why I took this trade. And it's setting up for a daily cock. So that was the other thing. If you look at the daily chart, it's not the greatest because it did a daily cock here and failed, but you can maybe expect somewhat of a move, maybe up to 6 if we're lucky. I don't know. MRAI. The chart under soon. What do you see? This one? No squeeze going on here. This is DWAC. Yes, I traded a couple times, red on all of them. Small size. I didn't go big. They didn't say what the special dividend was. Oh, $8 per share of common stock. Wait. They did say. Huh. That's a lot. Why are they giving money out? Being paid to use a portion of the produce from the closing of a recently announced sale of the company's web-based market platform assets. March 22nd. Okay. There you go. That's a little bit more real. There you go. They're gonna run it now? Feels like it is, yeah. PHG 1 minute cock. It's juicing now, boys. Spreads tightened up. Revisions on these numbers. 80p actual and 140k expecting 150k. You're all in sheep. Nice. Nice. PHGE going. It's a 5-minute. Slide 89. Sellers here. Soon got the hourly. Hourly W. Dude, there's some hidden sellers here. What you doing? PLTR again. Another push. 854. Broke. Another push. No. Just gonna get out. I don't like that. Cooler's out, boys, so I can go now. getting out of the way. Soon Daily, 12 cents away. Sigma, what's cracking, homie? ETH went from 3 to 19. Wait, 618 Fibonacci broke an hour ago on what time frame? What time frame are you talking about there, homie? C-Pop's been on my watch list for ages now. I'm just waiting for another daily cock. This was the first one. Didn't do anything. The cucks haven't done anything. That's why it stayed on the watch list. But the next cock needs to do something. THG. See, I told you. I get out, it goes. You're freaking welcome. Average is 48. Jeez. Call. This is what you do. If you need to sell, sell. Sometimes they'll give you a grace if you call them. It's just a broker warning, right? So if you break the rule, go, listen, I didn't know, you play dumb. If they still lock you for 90 days, then you just switch brokers. It doesn't follow you. It's not attached to your name. Hell, you can even make another account on the same broker sometimes. But don't ever pass up profit for freaking rules. I can't. Not financial advice. Can't tell you what to do. Blah, 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 you know. Stay flagged. All right, we're looking for maybe 8:30 for some news. It's kind of garbage right now. Nikki Haley to drop out of the presidential race Wednesday. Oh, you think? She just got slaughtered yesterday. Like, I don't understand why these candidates stay in. Like, if you know you're going to lose, say even if it's a tight race, but you're not one of those in the tight race. Like, why stick around? You just look like an idiot. You know? She wants Fifi. That's not the way to do it, though. Like, taps for nice straight. Everyone knew who Nikki Haley was beforehand. Yeah, I know her name, and I also think she's a dumbass. It's not a good like men's moving back up. Like, why? You're just wasting everybody's time. You know you're not going to win. Everybody knows you're not going to win. Just look like an idiot. She wants a cabinet position. You think being a loser when everyone knows you're a loser gets you a cabinet position? That's what I want on my cabinet. Someone that can't tell that they lost. Keeps going and wastes everybody's time. Everyone getting paid. That's probably more it. It's probably more like it. Paychecks are still rolling, right? Sully. She has a good chance of running third party. She won only one state, and that was Vermont, right? No, it didn't get filled. Cancel the order, you idiot. I day. What do we got going on here? Who bought the dip? Viva Frey? Who's that? What and what? Why are they relevant? Okay. Wow. Powell is still saying rate cuts this year. GNPX. Yeah, I might do something. GNPX. Where that positive preclinical. Oh, they've already known it's positive data. Kind of a weird headline. NXL. Positive results. Chronic insomnia. APM open. Whoa, that was slow. Oh, this is the merge news. My internet's gone to shit here. Hands off. I don't know what's going on. And we're back. Whoa, that was weird. Oof, 30-cent spread all of a sudden. Should take this. And go sure. 42. Not a red. Sell. Sell. The hell? Oh, my internet's shit right now. What the hell? 550. Dude, I'm dropping internet like crazy. Of all the freaking times, man. I don't know why I'm dropping so mad. I usually have a stable connection. OBIO. Holy internet. Bay Street Bull, let's go 39.
39 months is a long time, but worth it to see your smiling face and all your used clothes smiley face.
I'm glad you like the clothes so much. We love you long time. In VNO top line data. So spready on these releases. Sorry, the data's already out on that. What is with my internet? AISP 5-minute over 813. Okay. That's gotta go. That can't just not go. Gosh. 9.5 out of 10. Oh, dude, per kit. I might have to go see it. Yeah, I've been waiting to have a nice green day before I go as a reward. And well, guess what? 3 red days in a row. So there's that. Did you get the popcorn bucket? Did you get the popcorn bucket? They're selling for $75 online on eBay. $70. What the hell? Yeah, Scranlin. Go ahead and eBay Dune 2 popcorn bucket. You'll know why. Well, I assume they're all used, but there are some with the plastic thing on. Oh, that kind of used. Do you see the remake? No, the remakes are not as good as the current. In fact, the remakes make you hate it, kind of. Marvel's Endgame Pop. Marvel's Endgame popcorn bucket. Let me look for you. Probably not. Bucket. Is there different ones? It looks like they go from 10 to 15 bucks. I don't know if they sell at that price. MAI popping up. I started running yesterday. News 5 seconds ago. Third line treatment. Now it says efficacy. Wait, 74. Yuck. Now you're going low. Okay, so that was a losing trade overall. Great. I just don't understand that. Strong efficacy of the third line treatment. Dude, the pressure. Is it gonna go now? CJY. PM 5-minute. Oh, that was a really nice one too. Jeez. 5-minute with a double bottom. Someone write that as a script for me, please. For automatic trading is what I'm talking about, William. Let's go, Swizzer. 11 months. It's only been 11 months, Swizzer. Oh, NKG and back to high. Oh. Did I miss 9 o'clock news? An idiot. Dude, this Femi, look, I don't know how this isn't getting the juice. Isn't this like that in vitro company? That's got to be a multi-million-dollar thing. AISP moving again. BlackRock bought record number of Bitcoin yesterday. Did you see that account that sold Bitcoin that's been holding for 14 years? He mined it in 2010 and then just freaking marketed it out 50 Bitcoin lots at a time. It was at 1950. Oh, jeez. What did it get to? 69,000, we'll just say, average. You know, just $65 million he cashed out yesterday. No big deal. God. You know that dude was pissed that he didn't sell 3 years ago, and he's been holding on to that ever since. He's like, if it ever gets there again, I'm selling. Soft white underbelly. That's a good interview, dude. All right, bathroom break. Good luck today, peeps. A few things to watch. AISP continuation from yesterday. A few daily charts. Interesting to see what DWAC does today. Super Tuesday over. It's not doing anything right now. So it kind of tells me it might want to sell off. BYSI hitting the scanners. That started moving yesterday. And PLTR, yep, they had the military contract. That's right about. UISI. Holy move. Moo. 450 BS. Moo. You're going to have to explain that one. I know, shocker. Money on open. Market on open. 415 buy side. What's like a normal amount, cheese? Soon coming up to that daily cock. 538. It's a lot of volume out of the gates here. Apple peanut pussy. Half that? Jeez. People buying the dip, huh? People buying that dip, huh? Watch that 170 from yesterday. My guess is it holds. UISI getting close to yesterday's high. Was it 19? Thanks for that really slow fill E-turn. I hit the sell button. I hit it twice. Dude, I'm getting some serious lag today. Nice work, switchers. CRDF has a nice daily if it wants to get back to high a day, 390. That actually just earned a spot on my watch list charts. PLTR selling off. Hollow. That was a nice cuck and go on Hollow. Daily cock now. Is this halting? BYSI went. RVSN. And cut. That'd be something. Is that today? $9.45. Okay. That'd be crazy. BYSI juicing. Give me a pullback on that one. AISP, maybe over 820 does something. $110% on call from yesterday. Jeez. Nice trade, homie. RVSN juicing. Did you hear that from Beta Chuck? People are using the AI tool to create violent and sexual images. Can you imagine? That's what I've been saying, man. AI is going to allow people to just to experience things legally that they otherwise wouldn't be able to. And it's going to be weird and crazy and scary. Now, that's just pictures at this point. Wait till it's video. Wait till it's video. Super unrealistic. All right. The AI pictures I've seen look incredibly realistic. Hollow. VR. Yeah, I know, right? It's a matter of time. We're gonna need the asteroid probably sooner than later. Soon. Nice rip. Daily chart coming up on soon. Got the daily. Or should fill. Or should fill. Man, they just freaking robbed me. PLTR. Red to green. BYSI is still juicing. Nope. What is that? ATNF. Now it's gonna go. Shit. Gosh. Oh my gosh. Can I not get it? Shitty ass Phil. Okay, where are we at? $100? Pull it together, SJ. Find some quality. Soon pulling back. PLTR juicing. MAI 5-minute Cuck and Go, maybe over 162. RVSNW. Be too slow on it. What is it? 315. Yeah, the chart is pretty horrendous. So that's a failed W. Careful, it needs to go like ASAP. Oh, it did. It tapped high day. No change, Bank of Canada. PLTR. BIAF offering priced where? $1.56. Jeez, this is coming down. Wish I could short it, but I can't. PLTR Cuck and Go 1 minute. RVSN trying. Freaking missed the 5 minute that I was looking for on this guy, but I'll take it. Okay. Send. Still going. This thing. In buyer. PLTR dump. Jeez, it's so volatile. RVSN's really starting to go. Right there. Exiting BYSI. I'm not going to sit there wait. I'd rather play it on the 5-minute now. 360. Real. PLTR back to the lows. NKGN trying to get back up. Got a ways to go. Still this really tight battle here on BYSI. .350's holding like a champ. Bollinger Bands are about to freaking touch each other at this point. Squeeze indicators glowing. Everything's there for it. Give us a small break to 49 and then rip it. That would be ideal. RBSN still going. NKGN still grinding. Isn't RBSN a low float? Why is it? They're not opening up too much. Daily got it though. Apple 5-minute hammer. PLTR, pretty massive range here. Main focus is here. Look at squeeze indicators glowing. Obviously, Bollinger Band's tight. Pressure on that 50. APEI high a day. Okay. That one's kind of weird. Really light volume. RBSN's still going. Two guys are short. Goodness gracious, dude. You're a freaking animal. Nice trade, good banana. PLTR through low a day. Lots of selling at this 350, but it can't break it yet. On BYSI. That holds the next 5 minutes. It's going to get juicy. Jeez. PHO joined the dollar club. Cash. Roger that. What do we got? Fed Chair Powell testimony. This could be a banger. I doubt it's any kind of pivot of what's been being said. It's a dump all at once, I assume so. Still juicing, RBSN. W here on NKGN. Over, what's that, 38 or something? Previous revised down. CMAX going from yesterday. Finally broke range for a second here on this BYSI. Let's see if it goes. Five-minute cock is that 52. Definitely don't want to see 350 get tested again. I'm gonna get out. I don't like that. Should have gone. The thing's so freaking tight. That should have gone. Maybe it still does. All out the CRDF. That didn't do anything. APM moving again. NKGN went. AISP. Still selling off. Okay, is live and out. BYSI long. Finally on the break. Coin dumping hard. Market's kind of rolling over here. I was looking at yesterday's sell off with like Nvidia. Damn thing didn't even move, man. It just went to VWAP. CXDO. Trying again. Just really light volume on this. CRDF 5-minute maybe. That didn't go the first time. There it goes. BYSI. 502 would be an interesting area. Juicer Magooser here, man. So you have $3 being at, or where are we at? $4. Oh, we're way over these levels. Shit.
Come on.
Seems like just yesterday I was an ugly little boy giving money to the market gods, paying my dues.
It's true. You were pretty ugly too, but now look at you. Freaking supermodel, Papa Sig, through 28 months. Let's go, buddy. Brutal dip. AISP. Trying to make a name for itself. Three tatas. Roger that. You gotta tell me which side they're on, though. RVSN's hopefully building a 5-minute. There's your gap fill. PLTR, nice steady run to the downside so far. RVSN 5-minute. Wow, Tesla. Jeez. MDIA daily breaking out a little bit here. Over the 220 level. Hold up. Roger that, cheese. Fun getting wrecked. Boo doo doo now. What song is that? What song is that? Animal? I have to play that right now. It's in my head. Animal Goose.
You smell that? What is that?
What?
What's that smell?
The cologne?
No.
Opportunity.
No. Money.
Good banana. Gift of the 5. What did you do now? What did you trade today, homie? Simpson Gods. You got that thing's number, dude. Oh, that's pretty funny. They got actual animal from the Muppets. VKTS could get hot over 94.67. Daily W. Is this the song I was thinking? This isn't the song I was thinking. This is not the song I was thinking of. That is not the song, by the way. Got me to play that? That's not even a got you. It's just dumb. Nope, not the song either. 27K? Oh, it's last week. Jeez. If it's not the song, 10-minute timeout. You heard it. You heard it. You heard it. This is Fed Pal. All right, I guess I should put this on.
Food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance.
And KGN getting a pop here.
Since the middle of last year, payroll job gains have
And
averaged
KGen Biotech getting a pop
239,000
of
jobs per month,
$1.72.
and the unemployment rate has
November
remained
Kilo
near
Golf
historical lows
November.
at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped to narrow long-standing disparities in employment and earnings across demographic groups.
VKTX Viking
Inflation
Therapeutics
has eased notably over the
96.29,
past year, but remains above the
about
FOMC's longer-run
9%
goal
for
of
Victor Kilo
2%.
Tango X-ray.
Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Long-term inflation expectations appear to have remained well anchored as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022,
No Trump
the
news.
FOMC has
Elon Musk
maintained the target
tweeting, just
range
to
for
be
the
clear,
federal
I'm not
funds rate at
donating money to
5.25%
either
to
candidate for
5.5%
U.S.
since
presidency.
its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2%
Yeah, I
goal
am still
and
on
keeping
mute. I
longer-run
wasn't saying
inflation
anything.
expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Chairman Powell. And I should have noted this at the outset, but this is your 25th testimony before the U.S. Congress as Chair of the Federal Reserve, and we thank you for your service and your commitment to congressional oversight.
Oh my God!
Very much appreciated. I'll now recognize myself for 5 minutes.
You can find the stone
for questions
in any situation.
Let's begin with what's top of mind. We have 2 issues that are top of mind with the Fed: regulatory policy, with the Barr proposal, the Michael Barr proposal on capital, and interest rates. We're in a political year, and the lens of a political year falls heavily on all government, all parts of government. There's a lot of debate about the past 3 years of high inflation and impact on American families. And now that inflation is receding, there's been a great deal of speculation about when the Fed would cut rates. Some say that
Fed Chair
be a
Powell
lot of rate cutting this year. Some say none.
said rate cuts will
what say
depend
you?
on path of the economy. Incoming data will determine
I say that
rate
really it
cuts
will depend on the path of the
begin.
economy. Our focus
Why
is
is
on
Chuck faster than
employment
this? Someone give me a
price
better
stability.
stream.
And
This one
those-
sucks.
And the incoming data as they affect the outlook, and those are the things we'll be looking at. I can go further if you'd like.
Give me a
So
better
at what
stream.
point will the Fed be forced to cut rates? What
This one
does the
sucks.
data? What kind of data would you point to? And do you have any updates there?
Powell said we would like to have more confidence on inflation. We have
what we
Chuck's
said is
faster
that
than
the
my
committee
feet.
would,
but want
It's not my
more.
internet. Suck
We'd
it.
like to see more data
Powell
that
said,
confirm
let's
this
see a
and
little
make
bit
us
more
more
data so
confident
we can
that
become
inflation is moving
confident.
sustainably down to 2%. We have some confidence of that.
And KGN shares are hitting new highs now, $2.06, November kilo golf November, right now up 139%. Powell said strength of economy and labor market means we can approach that carefully and thoughtfully.
Market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal that Vice Chair Michael Barr has proposed and that the Fed is taking up. The concern is on both process, meaning how the proposed rule was developed, analyzed, released for comment, the general concern of
GILD
lack
and
of economic
MRK, Gilead and
justification
Merck
for these
announced phase
actions.
2 data showing
And,
investigational
KGN
oral
holds
once
it up.
but also on
weekly
the
combination
substance.
regimen of
The proposal
islatravir
goes
and
much further
lenacapavir
than
maintained
the Basel
viral
III
suppression at
committee
week
recommended
24.
on
That's
capital
Michael Romeo
requirements,
Kilo
putting us
and
at
Golf
great
and Lima
disadvantage
Delta.
internationally, potentially. So my first question is on substance. Is the Fed listening to these
Novel
comments?
investigational
that have
combination
been
regimen has
really,
potential to be first
nearly
oral,
unanimous in
oral
opposition
weekly
to this
HIV
rule.
treatment.
Um,
Results support continued
and
development
are
of
they,
potential
is the
long-acting
Fed
oral
listening to
combination
these
treatment
comments on the
option
impact rule will have on everyday
in
Americans?
virologically
And
suppressed
what is
people
the
with
status on
HIV.
rulemaking, and what is the
Again,
plan
that's
moving forward?
MRK and
Pre-market hires, I didn't say
GILD.
that.
You're right, we've received voluminous and very substantive comments, as well as the quantitative impact
something
study
voluminous.
that we put out. We got those responses in mid-January, and we're carefully analyzing them. We had asked for very specific, detailed, data-based comments, and I'm happy to say that we did get that. So we're just now reaching the stage where we can begin to make decisions about how to proceed. We really haven't made any decisions yet, but I think I can say a few things. First, we do hear the concerns, and I do expect that there will be broad and material changes to the proposal. I'll add that I'm
Powell said
confident that the final product
expects broad
will be
material
one
changes to
that
Basel
does
III
have broad
proposal.
support both at the Fed and
IFBD trying to
and the broader
pull an
world.
NKGN potentially.
As far as process is concerned, we're
see.
really not at the stage of making decisions about that. That's down the road at least a bit. I will
ASP
say the
curled up
question
from
we
that
get
710
is
level.
reproposal, and I will say that we haven't made that decision, but if when we get to that point that turns out to be the appropriate thing, we won't hesitate to do it.
You
It's
won't rule
certainly an
that
option.
out. You would not rule that out at this stage of the game, reproposal.
Not at all. No, I think
Scroll
it's
right
a
through
very
now.
plausible option. It will depend on how things lie at the time when we reach
It's
that
at the
point.
top.
Okay. And there's a lot of concern
Oh,
about the
why
interplay
is it doing
between
that?
different parts of the rule. And if you change one, what does the economic analysis look like for the new proposal? So it is good to hear that you'll be methodical and the Fed will do its traditional role of building consensus around the substantive changes. And that is your intention.
Powell said more important
That is right.
get it
I
right
said
than
this
do
would
it
be a
fast.
thoughtful, deliberative process. It's more important that we get this right.
Powell
and that
said
we
we'll
do
have
it fast.
implications for the
We
economy.
understand
We
that.
need to get the rules right.
This is an important rulemaking, and it's going to have potential implications for the economy and the people we serve. We're going to take our time and do it right.
Thank you, Chairman Powell. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I want to talk to you about housing, but before I get there, let
Tell
me
you
address
what,
the
Maxine
issue
Waters,
of
she don't take no
mergers.
shit from
Last week, I
nobody.
wrote a letter along with 15 committee Democrats to you as well as DOJ, OCC, and FDIC.
She makes Pelosi look like a bitch.
Procedures. This is critical now that we just learned
Is
of
it their feed or
another
me?
mega merger
It's the feed.
involving Capital One and Discover, which would create the
Left
sixth
or right? Good God.
largest
Jeez,
U.S.
didn't say she
commercial
was
bank
hot.
with a major role in the credit card market. For far too long, experts have raised alarm
Barking at
that
her,
there
I'm
is a
like,
rubber stamping process of bank mergers where virtually all applications are approved.
APM
All
high
the
day.
while, unbridled market consolidation poses great risk to consumers and entrepreneurs. What is the status of your
All right,
update?
that's through VWAP. Let's see what this does if a hold happens.
Discover mergers.
Is their feet going to shit here?
I think I believe.
Coming
we're
up,
in
crude and
regular
gasoline
contact with the
inventory.
That's your
Crude
APM,
oil
Alpha
is
Pop, and Michael
1.48.
sure seeing an increase of activity, new highs. Note this is a micro cap APM.
We're looking at that and considering. I think on the potential merger with that you mentioned, we haven't received an application.
Ticker Paramount sure seeing a spike in activity. Note headline
It's
Paramount
early
just said
days.
it's
When we
being
do
talks
get
to
that
sell
application,
India
though, we're
TV
going
stake to Reliance.
Evaluate that merger as always under the factors laid out under the law, and that's our commitment.
So you do believe that your
that
bank
worked.
merger procedures are ready to do the work that's necessary
That's
when
all I
you
got, yeah.
evaluate this
With the Echo
possible merger?
train.
I do.
And are you supportive of organizing community hearings
Crude
this
a
merger?
build of 1.367
We
million.
haven't even, I
Gasoline
haven't
a
talked
draw
about that
of
with anybody. I will
4.46
say
million.
this, we've done,
Distillates a
we've
draw
done that in many
4.46
Okay.
million.
but
Okay.
that's not a conversation we've had yet. We literally
8
don't even
p.m.
have
trying to
an
do
application
exactly what
for it.
Thank you.
NKGN
We'll stay
did.
in touch with you on that.
Right?
So
Dip
turning
out of
to
the
National
open,
Affordable
nowhere near the
Housing
pre-market
and
highs,
Homelessness
grind,
Crisis,
VWAC
where
break,
we've seen steady
rip, high
increases
day,
year after
halt
year
up.
in home prices.
Crude
See if
and
getting a
this-
rent
pop here on
which are
that
a
larger than
symptom of the
expected
chronic
draw.
See if this does the
undersupply
same
of
thing.
affordable housing. Indeed, more renters and homeowners are now spending more of their income than
$80.10,
ever
up
on
about
housing costs.
2.5%.
And as you know, housing costs continue to be a primary driver of inflation. Do you think the Fed has sufficiently emphasized the role that housing costs play in keeping us from your 2% inflation goal? Do you think it's reasonable to believe that monetary policy can accomplish
Lunar
this goal
hitting,
without a fiscal
an
policy
alert,
response? And if
downside.
you do, how long will it take to get there?
Housing
10-minute halt on
services inflation
NKGN?
is one of the three components that we look at that make up the core PCE
Crude
index.
smaller
And it
build
has
than
been coming
expected,
down,
and gasoline
from its heights
larger
of
draw than
a couple
expected.
years back.
NKG,
It's
let me
part of the
see what
story. I
news
think
was
the
on that
overall
one.
story is that goods price inflation has
PHIO,
turned negative. Goods prices
Actually, there's no
turned
news.
down.
Manhattan,
So there's that.
Housing
At least
services
on E-Trade.
inflation, you can
Papa
see
Hotel,
from
India,
I haven't
Oscar.
heard any news
currently
on it all
entered
morning.
into
Well, I've kind of
leases
ignored
that
it.
as leases
after it
turn
pulled
over,
back.
the increases are going to be smaller. So in our forecast and in everyone's forecast, housing services inflation comes down.
It's
And
been
that leaves
reported that the
non-housing services.
methodology used to assess housing costs as an indicator of inflation is imperfect. Namely, because it considers
The only
costs
thing I have
based
is
on
from 2
both
days ago.
new and old rents,
Present data at the end
including
of the month
for
here.
owner-occupied housing on a month-to-month basis. This results in stale data since families' housing costs typically do not change unless they move or their lease is up for renewal. So to address these imperfections in the housing cost indicators, the Bureau of Labor Statistics and Cleveland Fed created an
Kodak
improved
moving?
methodology based
Daily
solely
Cock on
on
Kodak.
new lease rents, which is referred to as new tenant repeat rent index. Has the Fed incorporated this new indicator into its economic assessments? If not, why not? And so what changes has it had on the level of housing inflation observed by the Fed?
So we're well aware of that, and we do incorporate it into our thinking. As I was starting to mention, that is the reason, the fact that market rents are moving up at a much slower pace is the reason why forecasts are for housing services inflation to come down, and that absolutely plays a role in our thinking.
Thank you, and I yield back.
Gentlelady yields back. The Vice Chair, Mr. Barr, I'm sorry,
Wrong vice chair.
wrong Vice Chair. The gentleman from Arkansas, the Vice Chair of the full committee, Mr. Hill is recognized for 5 minutes.
Thank you, Chairman. I want to welcome you, Chairman Powell, to the committee. We're glad to have you back and your expertise. And I want to pick up where Chairman McHenry left off on his conversation about Basel III Endgame. You made a good point saying you're not taking the whole concept of reproposal off the table as you review the analytics. And you all discuss the interactivity of that rule with other rules. So if you were to repropose the Basel III Endgame, would the Federal Reserve delay then the long-term debt proposal that's on the table? In other words, would you agree that the agency should not finalize this long-term debt proposal for bank holding companies until banks have a better understanding of what their capital obligations under Basel III Endgame might be?
So we haven't made the first decision yet, so it's hard, I couldn't say definitively, but yeah, that's a question we'd be asking ourselves is what would be the implication for other rules, including the long-term debt?
Well, and is the Fed considering changes to the requirement for regional banks to issue long-term debt? Right now, it's stated to be issued at 6% of risk-weighted assets in abundance of caution in case there needs to be a resolution, obviously. We know the logic for it. But as I understand it, it's being required at both the holding company level and down at the bank level. And that
Whoa,
seems
volume on
redundant to me. Are you
soon.
aware of
Like
that?
a
And have
million
you
3
considered
shares just
changing
ripped
that
through.
in your discussions?
Yeah, so that's another area.
Anyone
where
see
the
that?
comment period ended a little while back. And so once again, we're in the process of evaluating the comments. There will be a thoughtful, deliberative process around that. we welcome comments on these kinds of things. They're very important implications for the banks that are affected. We want to understand the effects, make sure we understand them correctly so that we can evaluate, what a final rule should look like.
Good. Let me turn to the monetary policy outlook. As the chairman noted, consumer prices are 17% higher for American households since President Biden was inaugurated back in January of 21. And yet, in spite of that 17% increase in cost, real wages have actually fallen 2% over that period. So there's no doubt that inflation is the biggest issue facing American households. And in my view, there's three principal causes. Certainly, we had supply disruptions, but we've had unprecedented fiscal policy
shot up out of nowhere.
laxity. You described it in a recent interview as unsustainable. But we also think that the Federal Reserve, in my view, and many people in this committee commented, should have reduced accommodation after the pandemic sooner. One of the things coincident with that, which is what I want to talk to you about, is that the FOMC announced in August of 2020 this flexible average inflation targeting framework right in the middle of the pandemic, which many of us didn't understand why the Fed would take that decision then, but it would give you flexibility on the 2%, saying the Fed could allow inflation to rise above 2% and stay there
No big deal.
above that level for some time because the Fed had such challenges in getting the price level to 2%. That was a major shift in the Fed's approach. Do you think, in retrospect of now what we've witnessed over the past 4 years, that was a mistake in hindsight to change that framework, and is it under review?
So we said we would do a review on a 5-year basis, and that means we'll be starting that review toward the end of this year. So we really haven't started. I do think that the question you raised will be one of the questions we look at, but the bigger question really is that change in the approach
KGN.
was really based
Again,
on
let's see.
the fact that we'd had very low interest rates and very low inflation for a long period of time. And policy was always very close to the effective lower bound, so there wasn't any firepower for central banks. And so it was a way to keep inflation expectations
You have
anchored at 2% and not have
762,000.
them slide down. Now we have entered a different period. The pandemic really may have
Yeah,
changed that. in a
really
sustained way.
weird
We
price
don't know
action.
that yet, but that's the big question we'll be asking
PARA,
ourselves is,
Paramount said
the-
in
is
talks
the
to
effective
sell India
lower
TV
bound
stake to Reliance.
to be thought of in a different
That's
way
from
now. If
Economic
it were,
Times,
that would have ramifications
ET
for
Now,
our
citing
framework, but we haven't
agencies,
we haven't
that's
begun the review
PARA.
yet. It'll begin at the end of this year and probably end late the next year.
Thank you. Yield back, Mr. Chairman.
2 minutes
Fed
back.
Chair
We'll now
Powell
go to the
said
gentleman from
pandemic
New
may have
York,
changed in a
Mr. Meeks,
sustained way
for 5
how we
minutes.
target
Thank you, Mr. Chairman.
inflation.
Thank you, Chairman Powell, for being here. And I think I want to pick up a little bit right where we are. 2019, 2020, the entire world was under the unprecedented pandemic with COVID rate. Is that correct?
Yes.
At the time. And that changed a lot of things with reference because not just for the United States, but for the entire world. And it affected the economies of countries
1,000
just
share
about
buy now.
on the planet.
It's gone.
That's not also correct?
Yes.
And supply chains was disrupted.
Back up.
In fact, I could remember many Americans and people around the world could not
is
get
bizarre.
toilet paper or paper towels and some of the basics. And so the prices, because of the, of supply and demand, skyrocketed, causing the inflation, not only in the United States, but basically all over the world. Is that correct?
Yes.
And so therefore, the Fed had to do certain things because of what we were in at that particular time. We couldn't just go back and act like the pandemic wasn't there. We had to do something to try
Ticker
to make sure that
TRIP,
we were
Tango
able to
Romeo,
get
India,
through
Papa,
the
shares seen a
pandemic.
spike
Is that
in
not
activity,
correct?
new highs.
Yes.
And now we're at that point where we're about to get through this pandemic. And we can look at the rest of the world, what they did or didn't do at that time. But
Note
what we did
Apollo is
at that
said
time.
to have
And as a
expressed
result of
interest
that,
in
3
TripAdvisor.
years post the pandemic, when you look around the world, I think that you were correct with what you stated, that by most accounts, our economy is doing well. In fact, I would say our economy is doing better than most of the other countries in the world. Would you say that's correct?
I would.
And so, I would say then that some of the other countries of the world maybe should have looked at
Jerome Powell's
the
like,
policies
"Yeah,
that we
I'd
put
say
in
so.
place thereafter,
Freaking
so that
A."
they could get out of it, so that they could have a labor market that is strong, where the unemployment rate is near a 50-year low. And as you've stated, inflation is also now coming down faster than any place else on the planet, just about. Is that not correct?
I think that's right. Yeah.
And I think that you also recognize a mismatch between the strength
CCCC
of the
hitting the
economy, that's what we're
scanner.
talking about in
Okay,
the
there's
field.
a little
And I think
poppy.
that
Come on,
Ranking
baby.
Member Waters touched on one of those big issues
What you gonna
of
do?
housing, of which is now, we're still trying to get that under control. And I think the ranking member
you
has some
gonna do?
ideas on how we can do that, and that may be something that you need to consider so that we can further get down
you gonna do, Soon?
inflation rate. And the other would be the commodity markets, because the cost of food is too high and people. So that's something else that we need to get in control. Is that not correct?
Yes.
And let me just ask this. Can you say that there's a connection, for example, between conflicts in other areas of the world, like Russia's war against Ukraine and or the turmoil in the Middle East and the economic pressures that the United States feels? Does that not also go into the reason why the cost of commodities can be still higher? Is there a connection therein, Mr. Chairman?
Certainly the war in Ukraine caused commodity prices to move up sharply.
So could you tell you what is the, what would the connection lead you to believe that there is an urgent need for us, I would think, for, when we're running out of time, for us to do everything that is in our power in Congress to support Ukraine, so that we can make sure that that and other strategic partners, that we can help the commodities market, and that would help lower the cost of some of the commodities, bringing food prices down, if we would just be able to pass certain things that's going to help Ukraine right here in the United States Congress. Is that correct?
Here's where it gets outside of our jurisdiction. So I wouldn't have an opinion on Ukraine funding.
But if we had more grain that was going through, it wasn't blocked by Russia, things of that nature, that generally just, says that helps bring the cost down. Cost is higher because of the disruption in the Black Sea that's happened because of this war. So that would help bring the cost down. That is not necessarily the policies just here in the United States, but that's the policy because of what's going on in Russia. And we need to make sure that we do something to prevent that if we really are serious about bringing inflation down.
APM.
Is that not correct?
Some levels.
I think
There's
it's
a
correct
there
that
as well.
a full supply of grain would help with commodity prices.
And so, instead of us playing politics
and go
with
would
this
have been the
and
answer.
acting like it is your fault or anyone else's fault that we had to go and do what we did because of the unprecedented pandemic, what we did was save
for
the
juice
economy
for.
then, knowing we got some problems that we had now, and now we are recovering
And
quicker and
geez, you
better
just
than
made me
any
miss
other
out
country
on
on this planet
$1,000.
as a result of your policies and the policies of
Gentleman's
Joe
time has
Biden.
expired. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman.
But it was a good trade.
Chairman Powell, thank you for testifying today. When you were before this committee a year ago, I cautioned against raising capital requirements
All
on
right, I see.
commodity
Hey,
derivatives
geez. Is this the
that
conference?
our agricultural and energy producers use back home
The
to
Morgan
keep
Stanley
prices
one?
of food and power stable for consumers. At the time, you said that was a very specific
Arm
concern and
Holdings
you
would be
weren't sure
good.
the
11
proposal would
a.m.
even address commodity derivatives. And in fairness, that was before the Boswell proposal was officially published. Unfortunately, we now know that the proposal does impact commodity derivatives, and in fact, they are among the most penalized financial
Nice work,
products. that
Papa
banks
said. Great
offer.
minds think alike.
And I would note for just a moment, I very much appreciate your comments and responses to.
Did I
Chairman
predict this
McHenry
shit or did I
about the
predict
nature
this
of the
shit?
overall
Pulling the
proposal.
NKGN?
Congress wanted
same
end
exact
users to
thing.
be able to
That's
secure
gonna
their
go halt
hedges
up.
without
Now, if
posting
it halts
margin
up, then
to keep
I am the
derivatives
prophet.
markets affordable.
I am the
But I've
prophet
seen
they
estimates
foretold
that
of.
some of these types of transactions for end users could face
Halt,
10
you bitch.
times the capital
We
requirement.
will halt now.
Chairman Powell, make me feel a little better. Ease my concerns here. Will you and the Fed work to fix this?
Let me start by saying I want to echo the fact that our
I am the
our
one they
commodity
spoke
markets and
of.
our capital markets are a huge
I am the
national
prophet
asset, and we need them to be functioning well.
that
and
your
with as little
forefathers
friction as
told you
possible.
about.
I now
I am the
understand that what
one.
you're referring to is the things that were done to
I am the call
increase
maker.
capital requirements for various kinds of derivative activities And I'll just say that's an area we're aware of the concerns.
I am the
It's an
halt
area we're
breaker.
Taking a very close look at.
I appreciate that.
Hear
I
me
was a
roar.
member of the Dodd-Frank Conference Committee, where there was bipartisan support to not disadvantage end users, farmers, ranchers, small businesses. This had broad bipartisan support then and still does today. Unfortunately, the Fed could undermine this longstanding work done by Congress. I'd like to enter a few letters into the record, Mr. Chairman, that discuss the detrimental impact to end users. First, a joint Agricultural Trade Association letter from the American Farm Bureau Federation, the National Cattlemen's Beef Association, among 7 others. Next, a joint Energy Trade Association letter from the American Gas Association and 4 others. And lastly, a letter from the American Public Power Association and the National Rural Electric Cooperative Association.
Without objection.
Thank you, Mr. Chairman. Chairman Powell, I'd now like to focus on how the proposal is set to significantly disincentivize banks from offering clearing services. In Dodd-Frank, Congress mandated central clearing as a way to reduce risk in the system. The number of banks that can clear derivatives for end users has reduced over time, making it harder for end users to find a bank to offer this service. There are some estimates that the Fed's proposal will increase capital for this activity by 80%. I'm worried that this will make it even harder for end users to find a bank to clear their hedges. This also comes at a time when the SEC, our friends at the Securities and Exchange Commission, has just finalized a rule in December that will increase clearing in cost in Treasury markets. This will have a real impact on market access and liquidity, not just in commodities, but the $26 trillion Treasury market that plays a critical role in the world economy. Will you work with the CFTC to address this problem?
Again, I'll say that we're aware of those concerns, and we're prepared to work with other agencies and also to make sure that our capital proposal appropriately addresses them.
The strength of central clearing is entirely dependent on banks' willingness to participate, and problems with the Boswell endgame warrant a full reproposal to give us time to appreciate their consequences. And there are real consequences, as you and I both know, Mr. Chairman. And with that, Mr. Chairman, I yield back the balance of my time.
Gentleman yields back. The gentleman from Texas, Mr. Green, is recognized for 5 minutes.
Thank you, Mr. Chairman, and welcome again, Mr. Powell. It's an honor to have you before us today. I always enjoy hearing your commentary. As you know, recession and inflation, these are buzzwords, and they are used in some circumstances to cast a dim light on perhaps the Fed and others who are working to end some of these troubling circumstances we're dealing with. Are you now at a point where you believe that there will not be a recession? There was much talk about recession.
Note to your VTEX, Victor Tango, Echo, X-ray, sure seeing an increase of activity. Note circulations of a newsletter buy for VTEX.
What is your position currently on a recession?
So U.S. growth last year was in excess of 3%. What we're seeing so far this year is continued solid growth. My expectation and that of other forecasters and of my colleagues is that we'll see continued growth at a solid pace. I will say, so there's no evidence or no reason to think that the U.S. economy is in or in some kind of short-term risk of falling into recession. Having said that, though, there's always a possibility, a meaningful possibility that an economy will fall into recession. I don't think that possibility, though, is elevated at the current time.
Thank you. I appreciate your saying this because we want to, at some point, eliminate the great deal of fear associated with just the term recession. Next point, the December FOMC projections showcase a slightly lower unemployment rate than last June's projections and slightly higher GDP, suggesting a soft landing. remains likely. Are you of the opinion that we're headed to a soft landing, Mr. Powell?
I'll just say that what we've seen so far is an economy that's growing at a solid pace. We're seeing a labor market that is still tight, still strong. Wages are moving up, but the labor market's coming into better balance between supply and demand.
Let's take our
Inflation has come
APM,
down
Alpha Papa, Michael,
sharply,
share seeing
really,
continued
since the
heavy
middle of
activity,
last
new
year. So
highs.
those are the
APM.
conditions we see. They're very attractive conditions, and we're trying to use our policies to keep that growth going and to keep that labor market strong while also achieving further progress on inflation. That's our goal. And I think there's a possibility we can achieve all of that while keeping the labor market strong and the economy growing? Yes, I think there is a possibility. Indeed, that is what we're trying to achieve.
A soft landing can be difficult to identify. We could possibly have a soft landing and miss the point at which the landing took place. How do you define the soft landing such that a member of the public, a layperson, would understand that we have indeed had a soft landing?
So we really think about it in the terms I just discussed, which is we want to keep the economy growing. We want the labor market to remain strong. 3.7% unemployment is pretty near 50-year historical lows. We want inflation to continue to move down closer and closer to that 2% objective. And we've made quite good progress on that over just the past year. So we want to continue those conditions. And I don't want to put the label on it. Other people can do that. But I would just say we're using our tools to keep a strong labor market and strong growth while making further progress on getting inflation down to 2% for the benefit of the public. That's the economy that we're trying to achieve. And I think there's we're on a good path so far to be able to get there.
Well, I concur, but I would ask this as my last question. Will there be some announcement at some point that we've had a soft landing? Because we have people who are continually indicating that we're not having a soft landing, there's a possibility of a recession. So will there ever be some official statement that would give people some comfort?
I don't think by us, no. I think we're just going to keep our heads down and do our jobs and try to deliver what the public is expecting from us. We wouldn't be, declaring victory like that, but.
The gentleman's time has expired.
Thank you, Mr. Chair.
Thank you.
The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very much. Chairman, welcome back. I think we enjoy this. I hope you do too. I know there's some bit of trepidation about all the things that are available to us and you to answer. I learned a long time ago on a campaign trail, every problem can be solved on a campaign. Reality is a little bit different. Welcome back despite all that. Looking at the Monetary Policy Report, March 1st, 2024. And as I review this,
Let's take our MED Ash, you're seeing a spike in activity, new highs. Michael
high
Echo Delta
prices
Sandy.
are here to stay. Because what I've heard you say today in this report really go to is you got everything under control, but we're going to keep the high prices. And I think the high prices really take a toll on the American people, as you're hearing from our colleagues, no matter whether they be Republican or Democrat. Page 7 of your report, you don't have to go focus on it. It says, while current services, core service price inflation has been
Fed Powell
slowing,
says so far
but
we have an
remains
economy
elevated.
growing at solid pace.
It
Labor
does.
market is still tight. and strong.
Labor costs, as you
Inflation
know,
has
and
come
energy
down sharply.
costs are a
These are very
driver to
attractive
your
conditions we
monetary
want to continue.
policy.
I think we can achieve a soft landing.
The question that I have is, because
We are
you
using our tools
began
to keep strong
referencing
labor market
policy,
and strong growth while
2
making
weeks ago or
process on
so, the
inflation.
president announced that
We
he
are
was
on
going
good
to slow
path so
down
far and being able to get there.
the gifting of
TripAdvisor shares up
opportunities in
3%
Texas
after Apollo
for natural
expressed
gas
interest
to be able
in
to
exploring a
continue
bid for the
the
company. That's
exploration.
TripAdvisor,
And this
Tango
in Texas
Romeo,
is
India,
$1 trillion
Papa
answer problem to us,
shares up
because if we do
3%.
not constantly go find through these new finds, but also through the permitting process, we're in trouble. But we're also putting in trouble our contracts that we have with Germany and a lot of other countries. This is going to mean also that business in America continues to have high prices because, as you know, wages are already high and now energy is high. There's no resiliency to continue this and see the American people win. You talked about policy. So what's your advice
Ride
to
Group,
policy
shares
about
open for
energy
trade.
and what this administration is doing on the policy?
IPO, that's RYDE.
We have,
Romeo,
broad,
Yankee,
significant,
Delta,
important responsibilities,
Echo.
but we're really not responsible for energy
Shares
policy. And we try to
spiking.
avoid commenting on.
Seeing volume.
But it
things that
has
we're
a
not
huge
responsible.
impact on this report. It
Trade
arbitrarily
X Health,
keeps
ticker
prices high.
MEDS. Shares halted on
It
circuit breaker to the
arbitrarily
upside.
means that business is not, while they're
MEDS.
making money,
Mike,
and while
Echo,
households, people do
Delta,
buy that, it's diminishing
Sierra.
their long-term
Shares halted.
advantages to make progress. So you're just going to leave that alone?
Really not appropriate for us to comment, on, if I'm commenting on energy policy, I should comment on everything.
Well,
we have a
you-
mandate, which is maximum employment and price stability. We take decisions by the legislature and by the administration as a given. We're not in charge of second guessing them. It's just not our job.
Okay, well, all right, let's say we're not going to second guess them. I will. I believe that the energy policies.
Ticker ARM
that the
Alpha
president
Romeo
and
Michael
the
ARM.
Democratic
Note J
Party
Capital out with a
supported
short report
are
on
causing
ARM.
a huge boom in prices staying high. They will not come down. A boom in attacking the energy industry, jobs that are associated with it, our foreign policy as it relates to contracts that we have signed with foreign countries, giving up the natural gas market almost entirely on a world market to Qatar. It has a huge impact on whether we are going to keep prices high or control these prices. It has a huge impact on, I think, your monetary report about how many houses
Coach
get
base,
built, how
ticker
many jobs get built,
BASE.
whether we have jobs in place, whether we
TLTR again.
continue to have more jobs
Wedbush
available than
raises
workers
target
that
from
are there.
26 to
Because
23.
over-regulation is
From
having a
23,
lot
sorry
to
about
do
that,
with
that's,
the
Coach base.
nervousness, not only
Bravo,
on this
Alpha,
panel, but
Sierra, Echo.
also by the American people. It would be my hope that you would pass some sort of a memo and tell them you have no opinion, but you want
National
them to see
Transportation
what the
Safety
impact
Board
is. I wanna
Chair
thank you for being
says
here. Thank you, Mr.
investigators need
Chairman.
more
I yield
cooperation
back
from
my
Boeing.
time.
An
Committee yields back.
investigation
The
in
gentleman from Connecticut, Mr. Hyman, is recognized for 5 minutes.
Airlines
Thank you,
MAX
Mr. Chairman,
9.
and Chairman
That's coming
Powell,
from
thanks
the
for
Senate
being
hearing.
with us today. I have a question, but I want to start by acknowledging, not celebrating, but acknowledging what has been a really remarkable soft landing
Nick, you're
in our
freaking
economy.
killing
And
it
I'm not
today.
celebrating because the American people, consumers, are still feeling the effects of high prices. Wages haven't caught up with prices in some instances. But I think that it would be fair to say that observers would never have predicted the conduct of this economy. You yourself said it in the
Chuck,
final
this bastard
press
son,
conference of
Chuck.
2023 when you said a very high proportion of forecasters predicted
hope
very
Ride
weak
Group
growth or
shares
a
Main Chuck
recession.
never
trading.
gets fired.
Not only
because,
did that not
guys,
happen,
it's
trading
looking,
at
actually
looking
had
real
a
per
thin.
share.
strong year.
IPO
So
was
I want to
$4 per
acknowledge
share.
that and acknowledge your
That's
commitment
As
to
far as
independent
back.
monetary
Romeo,
policy
Back
because
up
I'm
go.
still burdened with this
Delta,
idea
Real
that
thin.
truth and facts matter.
Where are we at? Today?
I want to
280.
point out, especially having listened to my good friend Mr. Sessions talk about the energy market, truth and facts matter. We are producing more oil and natural gas today than any other country on the planet. We are the world's #1 energy producer. I could spend my entire 5 minutes sort of pointing out facts. The fact I want to point out here, and this comes right out of the report, is that the premise that
No shit,
inflation is
Soils.
Joe Biden's fault, is fiscal policy's fault, first is faulty because half the fiscal stimulus that occurred in the face of the pandemic happened under the previous president, Donald Trump, and it has faded. And this report makes the case. Core, and I quote from it, core goods prices have been declining as supply bottlenecks ease and import price inflation falls. So, Mr. Chairman, I don't want you to comment on that because it gets a little bit political, but I do think it's important that we keep some foot on the plane of facts. I do want to ask you a question, though, Mr. Chairman, because I always worry about risks that we see and risks that we don't see. And I want to use the remainder of my time to talk about a risk you're very conscious of, which is the overhang in the commercial real estate market. As you know, the Financial Stability Oversight Council identified commercial real estate as perhaps the most salient risk to the financial system, $6 trillion roughly in loans, half of that on bank balance sheets. In a 60 Minutes interview a few weeks ago, you characterized distress in the commercial real estate market as sizable but manageable. Do you still feel like that risk is
Ticker
manageable?
Pinterest, PINS,
Do you
share seeing a
feel like
spike
you've
in
got the
activity, new lows for
visibility and the
Pinterest.
transparency and the tools to address it? It makes me nervous because this has echoes of 2008, 2009, when vacancy rates were declined relatively rapidly. We're not seeing that right now. So how do you feel? Does that risk continue to be manageable, and do you have the tools to manage it?
I would say yes to that. I think it is manageable, and we've been, working hard to management for some time now, really. And what it really is it's a lot of downtown real estate where there's too much
RYDE,
office
Ride Group
because
shares
work
halted
from
on
home,
circuit breaker
work
to
from
the
home,
downside
and
at
also the
422
kind of
per
downtown
share. That's
retail that is
RYDE.
no longer as profitable.
Romeo
And
Yankee
things like that
Delta
are really
Echo.
part of it.
MEDS
So what we've done
shares
is
halted on
we've
circuit breaker to the upside,
we've
shares
looked
up
at banks that have significant
55.6%.
concentrations.
That's
and we've been in
MEDS.
touch with them to make sure that they have
Michael,
a plan to deal with that.
Echo,
There will be losses
Delta,
by some banks.
Sierra.
It isn't really the big banks. It's really medium and small sized banks that have these higher concentrations. It's going to be with us.
He's
It's a
so
problem
bad.
we'll be working through, I think, for several years.
PLTR,
And, the
nail it
idea
again.
is you've got to have enough capital, enough liquidity, enough plan to take the losses that you're probably going to take. And
5
in
minutes
this
setting up on
space
that
with
8
small,
p.m.
medium-sized
So let me ask you
banks.
about that. Sorry to interrupt, but let me ask you about that. Silicon Valley Bank, wild irresponsibility inside the bank, egregious irresponsibility on the part of corporate treasurers who put so much on deposit. The Fed also had some self-examination to do because the examiners and the supervisors of the bank, quite frankly, were not doing what they should have been. So we might be forgiven for being a bit skeptical of claims of being on this. What has changed in the context of Silicon Valley Bank that gives you the confidence that the supervisors and the examiners will be on top of this?
I see it with my own eyes, but frankly, there's a risk that we would overreact to something as significant as that. It's not like we wouldn't have reacted very, very strongly to what happened with Silicon Valley Bank, and we have. So I know that our supervisors are out there, and we're hearing back from media reports that we have been engaged with medium and small sized banks principally on this. So I am confident that we're doing the right things there. And I do believe it's a manageable problem. If that changes, then I'll say so.
Thank you. Thank you, Mr. Chairman. Yield back.
The gentleman from Missouri, Mr. Lukemire, is recognized for 5 minutes.
Thank you, Mr. Chairman. And thank you, Mr. Powell, for being here today. I'd like to associate my remarks, or myself, with Mr. Hill's remarks earlier with regards to FDIC proposed long-term debt requirements that are based on risk weighting of assets. I think it's an ill thought out proposal, and hopefully your position on FSOC, you'll be able to advise them and hopefully guide them that this is going to be held up until we actually get a Basel III rule. In October 2023, the board issued a proposal to update the debit interchange fee cap and regulation II.
Oh, that one.
This is very concerning.
MEDS, Trade
given the
X
data
Health
from
shares
both the
resume
GAO
trade,
and Fed's own
spiking
studies
higher,
show
now
that
up
Reg II
80%.
has significantly
And
harmed access to free checking and other banking services for the country's poorest
looks to be
citizens.
halted
Yesterday, I introduced the
again.
Secure Payments Act, which would prohibit a
So
rulemaking-
bad!
final
Halted on
rulemaking
circuit
until the
breaker
Fed,
to
among
the
other
upside,
things,
shares up
says the impact of the board proposed
79.5%. That's Men's
All right.
Trade
completes a
X
quantitative
Health.
impact analysis specifically as it
Michael,
relates to
This is
affordable
what
banking
Cheese
services
sent
for
over.
low-income Americans
Sierra.
and reports those findings to Congress. I understand the Fed acted here because you feel you're facing litigation, but I urge the board to proceed with extreme caution with any type of price control proposals, especially since the first iteration was so clearly harmful. Chairman Powell, knowing of the hardship caused by this policy on low-income consumers, does it give you
Is
any
this called
pause to continue
overputs?
down this road?
Is that what this is?
As you know, this rule is
2
out for
Bitcoiners,
comment.
3
We extended
Bitcoiners
the
at the
comment
top.
period to May 12, so we don't have all the comments left.
They put
yet.
SMCI
We'll
in the
evaluate them
meme
carefully.
category.
And make an assessment. I mean, the law does assign us a specific job, which is to assess whether an interchange fee received by a
Feds Powell
large debt
says
issuer
CRE, commercial real
processing a
estate
debit
risk
card
is
transaction is
manageable.
reasonable
We
and
will
proportional to
be
issuer
a problem
costs.
to work
This is
through
the
for several
obligation that
years.
Congress has bestowed upon us, not something we thought we sought, but that's our obligation under the law, and we don't know what else to do than to keep doing it for as long as that's our assignment. That's all we think we're doing, but I think that the concerns that have been raised will be things that we.
Well, hopefully you'll study this and understand
we
that
will.
from the previous types of rules along this line, they were very detrimental to a lot of low-income, middle-income folks. As you know, the price reductions that were promised during the Durbin Amendment, for instance,
MRAI going.
the added profits actually
Wow.
went to the largest retailers rather than go to the consumers as they were
Went
were
low a
talked about.
day
98%
for
was one of the
VWAP rate.
studies that showed that the retailers kept all the money instead of lowering prices as they were telling us that were going to happen. So I'm very concerned about that. So what's the legal basis for updating your regulation? You've talked about it a little bit. Do
Fed
you
Chair
believe
Powell
that there's
says our
something in the
Fed
law that says
supervisor
you
are
need to be
engaged
doing
in
this
the small,
updating all the time,
medium-sized
or
banks
should you be studying
and
it before you actually
on,
propose a rule
on their
and
exposure
make all these
risks.
things more appropriate?
Well, again, I think our reading of the law is that it's not something you do once and leave it there. It's supposed to be reasonable and proportional to certain identified issue or costs. The implication being there, if those costs change, then this should change. So that's our reading. I think we do a lot of work. We waited a long time to change it. It's been many years since we did change it, but we do quite a bit of work to
One of the
make
things,
this assessment, and we'll review the comments and the data that we get.
one of the things I hope that you consider is the fact that even though it's supposed to be on $10 billion and up, this stuff all rolls downhill. And as the last study showed, the smaller banks, the community banks are also feeling effects of this. So be sure and consider.
Now take a Mobileye share seeing a spike in activity, new highs. Michael Bravo, Lima, Yankee.
One of the things yesterday I had two different foreign banker CEOs in my office, and one of them brought up the subject to me, which is very concerning with regards to artificial intelligence being able to impact financial institutions in this country and our banking system. And I tell people, I said, think about this for a second. You find some individual who is a well-known individual, perhaps Larry Kudlow, Dave Ramsey, Bloomberg, somebody who has got credibility, and suddenly you see an artificially produced advertisement or Facebook post, and this person says, look here, we've got 100 banks that have got a problem.
No ticker Mobileye
Now,
currently
that individual
speaking at
didn't
Morgan
do
Stanley
this. It's
conference.
artificially produced. I've seen a commercial already with individual. You couldn't tell the difference between that individual and the real
Arm
thing.
should be speaking by now, right?
We have just come through the Silicon Valley situation. And if you have real-time payments, FedNow, where you can instantaneously transfer money, and you have people scared to death by some well-known individual through an artificial intelligence situation, and I can tell you that China is watching this like a hawk. They are ready to pounce on this situation. To me, I've got some bills that actually would solve the problem. Do you think there's some issues here we need to be taking a look at?
Pro-tie level
Yeah,
here.
I think we're
Pro-tie knot.
very
Shit
focused
tie
on,
knot.
The
AI,
Palladium
like
ETF,
many government
PALL,
agencies and-
trading
and
just
law
off the highs
enforcement
now, up
agencies
about
in
11%
particular.
now.
It's very challenging.
PALL.
You paint one picture, there are lots of pictures. you
Gentleman's
can
time
paint.
has expired.
It's interesting
now
because
very
the foreign
Gentleman's
banks
time's
actually are watching
expired.
this. Thank you.
We'll now go to the gentlewoman from Texas, Ms. Garcia, for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thank you for being with us this morning. It's always a delight to have you before us. Chair Powell, the February congressional.
No ticker
Budget
Mobileye
Office
shares
report
continues to see heavy
estimated
activity, new
that
highs
the
for
US
Mobileye.
economy will grow an estimated $7 trillion over the next decade, thanks to, in large part, to the surge in immigration, creating a larger labor force. Immigration also increases demand for goods and services. I know you mentioned in your report that that the growth sometime during COVID was held down due to some restrictions in COVID and restrictions on immigration. Can you detail how
MBOY, Mobileye shares spiking here,
at
2633. Michael Bravo,
this
Lima, Yankee.
report from the CBO in
MBOY.
this current report?
Can never buy the
So, I
Powell
am
said artificial
very familiar with
intelligence
the
is very
CBO report.
challenging.
I've
We
read
are
that.
very focused on
Demographic
AI.
projections, and I've read the economic projections, so I do understand what they did. And that
So you
they're
do
making-
agree with a $7 trillion
Whoa,
growth in
APM
the next decade?
I have no judgment on that. I haven't tried to make a parallel assessment, but I'm familiar with the assessment. What they're doing is they're saying more people more people working, bigger economy. And it makes the economy bigger. It's just arithmetic. If you say that if you add a couple million people to an economy, and a percentage of them will work, then there will be more output, and that's what they're showing. I just want to be very, very clear, though, that we don't make immigration policy. We don't
That was a
comment on
big level,
immigration
660.
policy, indirectly or directly.
No, well, I'm not asking you to do that, but, Mr. Chairman, I'm simply asking if you agree that the immigration surge has added to our strong labor force, which is necessary. I think you said that we expect a continued growth at a solid pace. So to be able to
Mobileye
continue
presenting
on a
today
solid
at the
pace,
Morgan
then we
Stanley
need that
conference.
labor force. Wouldn't you agree?
Well, so last year we got big increase in workers, and it came from two sources. One was participation increased from people who were already here, and in addition, we got a significant increase in immigration, and many of those people take part in the working economy, and so there was a big increase in labor supply that will have increased output. It will have made more people. It will have all kinds of economic effects. I'm just reporting the facts there.
Right.
I'm not going to say anything is needed for the future or good policy or indirectly or directly, but I mean, I think it's just reporting the facts to say that immigration and labor force participation both contributed to the very strong economic output growth that we had last year.
Right. Is it possible for the Fed to conduct a formal assessment into the positive impact immigrants have on our economy and report back to Congress?
Not really, no. I think that's a job for the CBO. We don't.
Tigger,
That's
GameStop
precisely
sure
what
seeing a
congressional
spike in
budget
activity, new highs for
Right,
GameStop.
but the other question that you've not addressed is, did you consider the CBO's assessment that the growth in the next 10 years would be 7 trillion and about 1 trillion in added revenues? Was that considered in this report? Because that was the February report, and this, I believe, is through February 29th.
So I think that the answer to your question is 10-year growth projections by CBO don't have big implications. They don't have any implications really for the current stance of monetary policy. But I will say that the immigration that we saw was a notable factor of the 2023 and 2024 economic outcomes. And of course, we're aware of that, and it plays a role in our thinking about appropriate policy and the path of the economy.
Okay, well, thank you for that. And related to that, I know that the last time that you were here, you and I talked about diversity and diversity inclusion efforts, both at the Fed, and I applauded you and well applauded the president for his appointment of Dr. Diana Kugler. I expect to visit with her this week. What other strategies and programs are you using in the Fed, not only in here, but in all the branches to ensure that there is diversity and inclusion?
So in terms of intake of people, when
Mobileye
we,
shares
go
continue to
to
pop
hire
here again. The
a
company
new- when the
presenting
Reserve banks
today.
go to hire a
It
new
can
president.
rip.
Those processes are very focused on having a diverse applicant pool, and you see the results of that more and more over the years. That happens. We don't have any role in appointments of governors, so that's not our job. The administration does that. In terms of, I'll just say internally, we're very focused on having an open and inclusive
Powell said
place
immigration
to
and labor
work.
force participation
And
both
also in
contributed
hiring,
to
we
strong
work hard
economic
to,
growth we
to
had
have
last year.
diverse-
The ladies' time's
Thank you.
expired. The
Thank you, Mr.
gentleman from
Chairman.
Michigan, Mr. Heising, is now recognized for 5 minutes.
Chairman Powell, good to see you in person. Mr. Chairman, I've got to make a comment here. It's stunning to me that equating an underground economy, which is very different and not a healthy alternative to the regular economy, and basing that on an illegal workforce that's not legally able to work, ultimately will fail. That is not a strategy to my colleagues on the other side. So just ask any farmer who's going to then have a regulator come in and fine them for employing people
Joe,
who are
let's
not
go.
legally allowed to be here in
Gifting
the
out the
country. That is
subs.
one
You
of
must
the
be
greatest
killing it,
fears.
homie.
So that's just a fallacy of growth within this economy that is not sustainable. Chair Powell, last fall I sent Vice Chairman Barr a letter expressing my concern over the cumulative impact pending rulemakings governing products and services will have on consumers. This morning, there's been a fair amount of time spent on Basel III, but among the agencies, and here I'm including Fed, FDIC, OCC, CFPB, and the number of pending or final rules is frankly just staggering. Regulators last year finalized new rules for the Community Reinvestment Act. The Fed is also looking at Reg II, which in my opinion would unintentionally undermine recent significant progress in bringing low and moderate income consumers into the mainstream banking system. And just yesterday, the CFPB unveiled a rule that would cap late fees for banks. And I just literally walked out of a meeting with my credit unions who are very concerned about those things that may be in their future as well. So I think it's critical that we don't look at any of these rules in a vacuum, and we need to consider their total impact and full scope on that. So I'm going to ask you a question I've asked some of the other regulators. How much do you, as the Fed, and you personally, consult with other agencies on their own rulemaking agenda? Do you coordinate? Do you talk?
So I don't lead that area of our business, but I know there's a lot of talking. Coordination, I'm not sure there is coordination.
We're in government. There's always a lot of talking. I'm
much
concerned about the
shortage.
coordinating. All right, well, let me ask you this way. When a rule is finalized under another regulator, are you mandated or have any kind of policy to go back and look at your other pending rules under your purview and see if changes need to be made because of these other agencies' rule makings?
There's no mandate like that. I think where it made sense to do that, though, we would do it.
But you genuinely have some sort of review of that. It's conscious.
I don't think there is a formal review.
Okay.
No.
I've heard repeatedly that elements of Basel III overlap with the Fed's annual stress tests. What are you going to do to address that overlap?
So we're in the middle of just at the beginning, actually, of deciding what to do about Basel III. And part of that may be the interaction with stress tests. So I haven't got anything for you on that today, but that's certainly an issue that presents itself.
Would like to continue that conversation. I do want to touch on the bank failures of last year very quickly. Do you think that the banks that ultimately needed the government bailout lacked sufficient capital, or was it more of a management problem?
So with Silicon Valley Bank, it wasn't really, could they have used more capital? I mean, they were actually raising capital. It was a capital raise that they announced that triggered the run and everything. So you can argue that it needed more capital, but I wouldn't say that that was the proximate cause, really. It was a funding structure that was all about too much concentration of
Well, many of us are, I'm asking the question because many of us are very concerned that those failures are being used as an excuse to raise capital standards across the board. And because the SEC just released its climate disclosure rule this morning, I'm going to touch on the climate related question for you. FSOC, the FSOC chair has repeatedly stated that climate change is, quote, an existential threat. Presumably a threat that is existential affects banks and financial institutions of all sizes.
Ticker Mobileye notes comments circulating on social media. Mobileye says on track to achieve second half 2024 accelerated growth.
Financial institutions. Why not everybody?
We are confident on our path to stabilize inventory levels.
That's a heck of a new thing. Yes.
We're not climate change policymakers. It's this is
Either
something
is the
that needs to
SEC,
be
I might
handled
add.
by elected representatives, and so we're starting this very carefully with large institutions who are already doing it, by the way. The things that we're doing, they're doing this because to remain active internationally, they have to be doing it. So we started with them because they understand it. Imposing it on smaller banks, it's not something I'm for.
Yep.
Gentleman's time has expired.
We'll
The
be
gentleman-
following up on the Taylor rule. So.
The gentlelady from Michigan is recognized for 5 minutes. Ms. Tlaib.
Thank you so much, Chairman. Thank you, Chair Powell, for being here. Do you agree with the April Federal Reserve report that compensation incentives contributed to Silicon Valley's bank failure?
I'm sorry, did I didn't
So
get-
the April Federal Reserve report, it said that compensation incentives contributed to the Silicon Valley Bank's failure. Do you agree with that?
I would say it's at best a tertiary factor, but it probably had something to do with it. For me, not a
So
major.
that's no?
That's very small.
Okay, so it did. Okay. So do you agree the appropriate rules on incentive compensation could have reduced the likelihood of Silicon Valley's failure? Maybe. You know, if they didn't take
No,
all
I
that
really
money?
don't think so. I mean,
So if
I
they
don't
didn't
think
take all
it's a-
that money?
I don't think it's a first order question for Silicon Valley. A lot went wrong there.
Yeah.
Incentive.
Ticker
They actually blamed you
MSOS, Michael
guys.
Sandy, Oscar
blamed- they
Sandy,
blamed-
note
they
seeing
blamed the
increased
oversight,
activity.
Even though they
No,
didn't respond to
Elizabeth
your
Warren comments
correspondences.
posted
We took our medicine.
Yeah.
near pre-market
Do you think it also has something to
on
do
a
with the
video
fact that
titled
Section
"It's time to legalize
956
marijuana nationwide"?
of the Dodd-Frank rule hasn't been finalized by you?
No, I don't.
You don't think it's the reason?
I don't.
You don't think it's because people made money off of the failure?
I think nothing.
You don't think money drove them to do what they did?
I didn't say that. I did, what I said, you know, there are lots
So
of.
they made money from it. They actually, it was a
I
lottery
do
for
not
them,
think
right?
that incentive compensation arrangements were at the heart of the Silicon Valley Bank failure. No.
Okay. Do you support a robust rulemaking for? Do you support robust rulemaking for executive compensation? Do you believe in Section 956?
Section 956 is the law. As I understand it, the agencies are looking at doing something. It's been 12 or 13 years, right? And
Yeah, multiple
nothing has
agencies.
happened.
Yeah.
It's been hard to get it done. I lived through the last episodes of trying
Yeah.
to get it done.
So do you believe in a robust
I
rulemaking
believe-
process for executive compensation?
I do, yeah.
Oh, great. Oh, that's awesome. Will you commit to helping finalize the Dodd-Frank section of 956 this year?
I wouldn't
It's been
say that.
12 years, Chairman.
Yeah, no, I want.
It played a role in the bank failure, Chairman.
If I can answer, what I would like to do is.
So you don't want to do it this year? I mean, I'm being serious. You're saying no?
If the member will
Let me answer.
allow the witness to answer the question, we've had a good day today, and the gentleman's trying to answer the question.
I would like to understand the problem we're solving, and then I would like to see a proposal that addresses that problem.
Okay. Do you believe people should profit off of bank failure? The executives that made those decisions?
No, not
They
the
should not
executives.
profit.
Well, I would say executives who are
Republican lawmaker
responsible
Gallagher
for a
says
failed
American
bank
ByteDance
should not
investors
profit
should
from
urge
the
Chinese
failure.
government
Absolutely not.
to
So
allow
they get to
sale of
walk away
TikTok.
with compensation based on their failure.
Well, you're asking
true, it
about a different rule that would have clawback and things like that?
Yeah.
Yeah, so that's something I know you've been looking at for a while.
Yeah.
That's certainly an appropriate thing to look at.
Yeah, because it's just going to continue to happen, is my opinion. It doesn't have to be yours, but it sure the heck could have helped here if they knew they were
Powell
going
said
to
clawbacks
walk away.
are
If they could
an
walk away
appropriate
with not
thing
the
to look at.
bonuses, the compensation. I mean, they
Executives
made money
responsible for a failed bank should
significant
not be
amount
able
of
to
money
profit from that.
for their bank failure. Last question, Chair Powell. Do you believe that the impacts of climate change pose a risk? Have you been talking
Powell
about
said
that more?
climate change is real and poses risks over the long
I certainly
term.
believe that climate change is real and poses risks over the longer term, sure.
So there have been some that say, higher interest rates it actually makes it more difficult to build out the renewable energy projects and other investments required to prevent climate impacts. Do you believe that to be true?
It's not I believe that we need to do our job that you've assigned us, which is maximum employment and price stability, and we do it through interest rates. It's not our job to consider the effect on climate change of that. And I think any effect on climate change of that would be kind of minuscule.
Okay. Last question, Chair Powell, who do you see as the major winners and losers from high interest rates in terms of income groups, age groups, and racial or other demographics?
So the point of high interest rates in the current environment is to bring inflation under control. The people who are hurt the most by inflation, as you know, are people who are on a fixed income, who right away are in trouble when the cost of transportation, food, energy, and when those things go up, they don't have financial resources to deal with it.
Have you
And
looked
we're
at the-
accountable to provide price stability to the American people. Those people benefit the most over time from stable prices.
Gentlelady's time's expired. We'll go to the gentlelady from Missouri, Ms. Wagner, for 5 minutes.
I thank you, Mr. Chairman, and I thank you, Chair Powell, for your service. I want to associate myself with the comments of my colleague, Mr. Himes. I am concerned about banks' commercial real estate exposure, and I do hope that the Fed is doing everything it can to ensure that the exposure that these banks have will continue to be, in your words, manageable, because this is a looming crisis out there, given the workplace changes and dynamics. Chair Powell, in remarks on Bloomberg, Larry Summers, former Treasury Secretary during the Obama administration, stated that, and I quote, "It would be much more productive for our central bank to be focused on the
NBOI
question
mobilized shares
of real estate
moving higher again now.
portfolios
Hit a
in
high
the
of
banks they
28.95
supervise
earlier, up now
than, quote,
27.34,
some of the more
up about
abstract
9.5%.
and
Company
politically
presenting at
driven
the
arguments that about
Morgan
various kinds
Stanley
of capital
conference and
charges on the largest banks.
updating
Do you
their
agree, sir, that it would be more productive for Fed
guidance.
supervisors and regulators to keep their eye on the ball, in this case, commercial real estate and other real estate investments?
I absolutely think we need to keep our eye on the ball on commercial real estate. And, I think we're doing that.
I hope so. According to your semi-annual report, the median of members on your Monetary Policy Committee estimate that your target overnight interest rate will average 4.1% in 2024. Does that mean that the median number of members anticipate that you will be cutting interest rates sometime this year by as much or more than a full percentage point?
No, it doesn't mean that. Actually, the summary of economic projection showed a median of, this is in the December FOMC, so this is now 3 months old, showed 3 rate cuts this year. So that would be 75 basis points, 3/4 of 1 percentage point. You were quoting the next year's number, so you would add that on. That was through 2025, I believe.
So are you anticipating that there would be more cuts
So what
here coming?
It's not, the way I would say it is, we're making economic projections. And so we write down a path of growth, what's happening in the labor market, what happens with inflation, and what goes with those forecasts is an appropriate monetary policy, appropriate interest rates. So we expect inflation to come down, the economy to keep growing, the labor market to remain strong. And if that's the case, it will be appropriate for interest rates to come down, significantly over the coming years.
Good.
What will really happen, though, it's not a plan. What will happen is actually what the
Powell
economy
said
needs.
if the
The
economy
will do something
evolves,
different from that, and that's what will actually happen.
Chairman Powell,
as we
15
hope
members
interest
of
rates will need
Congress,
to come
including
down
myself,
significantly over the
Ranking Member
coming
Sherman,
years.
Chairman Barr, and Ranking Member Foster, sent a letter to the prudential regulators regarding the impact that Basel will have on U.S. capital markets activities. The letter highlighted critical areas of our U.S. markets, including securities underwriting, securitization, and derivatives that will be severely impacted by the Basel proposal. This was also a common theme represented throughout the comment file on the Basel proposal, over 95% of them. Considering that 75% of financing in the U.S. is done through our capital markets, which are the deepest and most liquid in the world, why would the Fed continue to pursue this flawed proposal instead of re-proposing a rule that would not have such a drastic impact on the U.S. economy?
Well, in fact, the capital markets concerns you raised are among those that I raised myself in our open board meeting when we put this out for comment.
And you said you wanted broad support, and obviously there is dissent among some of your governors, the FDIC, others. So how are we coming on this, and how are we
we're working our way through the comments, and we're coming to the point where it'll be appropriate for us to begin to evaluate what changes are appropriate. I've said I think those changes will be broad and material, and that's where that is. But we haven't made any decisions.
That's your ARAY Alpha Romeo Alpha Yankee.
Seen SEC Chair Gensler
Share seen an
push the
increase of
envelope in terms
activity.
of
Note
rules
tip
and
ranks.
regulations that go well beyond the
I would
congressional
note
mandate, even
these two
encroaching
strong
on the
penny
jurisdiction
stocks
of
could
other
surge
financial
over
regulators.
200%.
What
That
is
now
the
being
Fed's
circulated.
response to another agency encroaching on its jurisdiction?
We do not comment on other agencies' regulation. However, if they were actually, to take your hypothetical at face value, if they were to come into our jurisdiction,
Oh, it's more than a hypothetical.
and we would react.
Good. Well, I hope you do.
The ticker
I yield
CLSD
back.
also mentioned Charlie Lima,
The lady
Sandy
from New
Delta.
York, Ms. Velasquez is recognized for 5 minutes.
Thank you, Mr. Chairman. Right here.
Hi.
Hi. Thank you for being here, Chairman Powell. Property insurance rates are becoming prohibitively expensive
LITM, Snow
or
Lake Lithium, and a
inaccessible
filing
for
said Angle
homeowners
Value
and
Uranium
developers
Project
in
received
my
renewed
community.
exclusive
The FSOC's
Prospecting
annual
license, that's
report
Lima, India,
identifies
Tango,
property
Michael.
insurance rates
That's
as
an
an
8K
increasing
filing.
risk, and I recently raised this issue with Secretary Yellen. Is the Fed monitoring the rising cost of insurance and its impact on macroeconomic?
If we'll pause the clock, you can have staff take a look at the microphone.
We
The
need to.
clock being frozen is out of respect for Ms.
Stop it.
Velasquez, or out of good luck, I'm not sure.
The clock.
But we'll get staff to listen. We'll just suspend for a moment.
We need to invest in infrastructure for this committee.
Yes. Well, we're trying to do electronic voting and no, it's hard enough to just get the microphones to work. Madam Clerk, thank you. Thanks. So all the photographers have left, so the awkward photos for Trish will be less awkward. Good.
Riveting.
Any luck?
STLA, Stellantis announced 5.6 billion euro investment in South
We're getting a
America,
new mic. It may not be better, but it's
as it's the
different.
largest investment in the region's history. That's Sandy Tango Lima Alpha.
Let's just restore our time. Not quite yet.
Oh, this one's back. Now this one's back. Okay, great. Doesn't want to be replaced. Okay. So,
All right, we'll start over. We're going to restore the clock. Thanks for members' indulgence. Ms. Velasquez, you're recognized for 5 minutes.
So, Mr. Chairman, I was asking you about the property insurance rates are becoming prohibitively expensive or inaccessible for homeowners and developers in our community. The FSOC's annual report identifies property insurance rates as an increasing risk. And I recently raised this issue with Secretary Yellen. Is the Fed monitoring the rising cost of insurance and its impact on macroeconomy?
so yes, we are very much aware of increases in insurance, including property insurance. and
Powell
it's
said
been adding
increases in property
meaningfully
insurance
to
have been adding
inflation.
meaningfully
It's not
to
something we have any
inflation
control or
pressures.
authority over. Same is true of auto insurance. They're just insurance generally prices have gone up a lot.
I got a question for you all. My personal email account, for some reason, changed my name. So when I'm sending emails out or whatever, it's like, it says my full name, and I don't want my full name on every email. Where do I go to change that? Can't freaking figure it out because Microsoft is so stupid. So if anyone can tell me where to do that, it's in the I don't know, Microsoft Mail app.
Impact on our economy.
It's in the
Chairman
Microsoft Mail
Powell,
app, which is, I guess,
I
like
know you spoke
Outlook
with
Lite.
Chairman McHenry a little bit on inflation and interest rates. Can you
Go
explain
to
what
settings,
evidence you're looking for before inflation has returned to 2% and interest rates can be cut?
Sure. So we're not looking for inflation to go all the way down to 2%. That's
Powell
not
said
what
we're not looking for inflation
we
to
want
go
is
all the way
just
down to
more evidence that
2%,
will give us more
but we do need
confidence
more
that
evidence.
inflation is
That
on a
means
path down
some
to
good
2%
inflation readings.
sustainably. So that will come in the form of good inflation readings, really. We want
And
to see, just a bit more evidence so that we can be confident. We don't want to have a situation where it turns out that the 6 months of good inflation data we had last year, that didn't turn out to be an accurate signal of where underlying inflation is. So we're just being careful. And because the economy is so strong and the labor market's so strong, we think we can and should be careful as we approach that decision.
And when you say evidence, what evidence? If there's anything.
So
that-
just more,
AAP
we'd like to see
Apple
more
terminated Epic
good, relatively
developer
low
account,
inflation
Epic
readings.
Games
We're not
developer
looking for
account.
better inflation readings. than
Epic
we
Games,
had.
since Apple
We're
has
just looking
terminated
for
the account,
more of
company
them.
cannot develop the
And what
Epic
will
Games
happen is,
store for iOS.
as we go forward, the
That is
12-month inflation will
AAP.
continue to drop because it'll be lower than early last year.
Thank you. Mr. Chairman, I would like to pick up on where Mr. Lee left off and reiterate the importance of the rulemaking on Section 956. This is an issue that I also raised with Vice Chair Barr, Chairman Grunberg, Acting Comptroller Sue, and I told them when they came before this committee that I will be asking for a status update on the rulemaking at every future hearing, because it's well past time.
I don't know where to change
12,
it. It just
13, 14
randomly
years.
changed. It's like,
If you are
Never had this
employed
issue
in a
before.
company and you are given a task, I will think that you will be fired if you don't get it done.
Jeez.
And it has taken 12 long years. So you are the chairman of the Fed. How is the Fed
RID,
working
RYDE
with other
IPO
agencies
has
to
been
propose the
halted on
rule?
a circuit breaker.
There's a lot going
Romeo
on
Yankee
in
Delta Echo on
regulation
the
at
way
the Fed
down now,
right now. My understanding
$3.70.
on 956 is that
That's
there have been discussions
RYDE.
between the regulatory agencies, and I think it's not 3, I think it's more like 6 agencies that have to agree.
I don't even know
I have not seen a
where-
proposal. I think something is
where the
under
compose button is.
under consideration, but it's
Freaking
not
A,
something that's gotten
Microsoft.
to me yet.
I will
Ride Group
ask
I have no
shares
idea
now
how to
at
next
make-
time, and believe me, I'll be here.
$3.70.
Great.
Thank you.
Actually opened at
Julie
$3.65,
yields back.
now at
Gentleman from
$3.70,
Kentucky,
just off the
Mr. Barr
lows.
is now recognized
Hit a
for
high of
5 minutes.
$5 earlier.
Mr. Chairman, good to see you.
Priced at
You
4,
have
that's
said numerous
RYDE.
times that the capital framework is about right and that banks are well capitalized. Do you still believe
Powell
this?
said,
do.
capital
And,
framework is about
given
right.
that you believe that, and given the fact that the Basel III Endgame proposal dramatically increases capital requirements on banks, would a reproposal that
Epic says
implemented
account
Basel
that Apple
III
terminated
in
was
a capital
intended to bring
neutral
Epic Games
way,
Store
could it do so
and
without
Fortnite to
jeopardizing
iOS
financial
devices in Europe.
stability?
Could, I mean, hypothetically, yeah.
Okay. According to Latham and Watkins, 97% of the comment letters either opposed, called for a reproposal, or expressed substantial concerns about the Basel III Endgame proposal. And those negative comments came from across the ideological spectrum and from various interests. Without objection, I would ask the chair to include that report into the record. Without objection, I'd ask the chair to include that report. into
Without
the record.
objection.
Thank you. And Mr. Chairman, did you see that report?
I did.
Does that concern you, that 97% of the comments were negative?
So we didn't do our own count, so I can't make an assessment, but I would say it's unlike anything I've seen.
The Basel III comment period ended on the same day as the Fed's data collection on the proposal, which is an odd process since the data should have been collected far earlier, analyzed, and the results should have been available for the public to comment on before the comment period ended. Why did the Federal Reserve choose to do a quantitative impact study during the comment period for the proposal, foreclosing any ability by the public to comment on the results?
This thing
of
was
the study?
$2.63 this morning.
Well, I mean, the movie's not over. We are where we are. And Vice Chair Barr did commit to putting the QIS out for comment. We will receive those comments and those comments.
Let's take our
will be taken into
SPRC, Sandy
consideration.
Papa, Romeo, Charlie, patent circulations on the name,
Speaking of process,
SPRC.
You've got your excellent general counsel right behind you there. I don't want to
SPRC.
get into privilege here, but
Size Park has
have the
treatment for
lawyers at the Fed
bacterial
raised any
infection.
process
Patent composition to
concerns or
methods of
Administrative
potentiating
Procedure Act
antimicrobials
issues, with the board?
with cannabinoids to treat
Let me just say
bacterial
that we're,
infections. That
we're
is
committed to doing
Sandy Papa Romeo Turley,
transparent and,
SPRC.
reasonable and data-based rulemaking in compliance with the Administrative Procedure Act.
Well, of course, giving the public the ability to comment on the quantitative data that has been provided obviously is consistent with good process. Sir, Governors Bowman and Waller, Vice Chair Hill, and Director McKernan all dissented on the proposal, and Vice Chair Jefferson expressed concerns with it during his statement. Under your tenure as chair, can you identify any other regulatory proposal which has elicited this much dissent?
No.
Have you in the past acknowledged in front of this committee that you will not move forward with proposals without consensus? Or you have acknowledged that in the past, that we appreciate that commitment to consensus. Have you achieved consensus yet on the Basel proposal?
Let me say, I am confident that we will, but that's a process that we're as I mentioned, we're evaluating the comments. We're just coming to the place where we're going to start talking about the path ahead. And I am confident that we'll achieve very broad support on the board.
Mr. Chairman, do you agree that the heterogeneity and business model diversity within the banking sector contributes to system-wide financial stability?
I strongly do.
And do you agree that a concentrated business model in the banking sector would present a potentially systemic risk?
Potentially, yeah.
And this is one of my major concerns with the proposal, Mr. Chairman, because by de facto repealing regulatory tailoring, subjecting Category 3 and 4 regional banks to one-size-fits-all standards that currently only apply to large GSIBs, discouraging securitization, which is the private sector solution for dispersing risk, eliminating the use of internal risk models, and transitioning the industry and regulators toward only a standardized framework, actually would push the industry
IPO
into a
for Ride
smaller and
resuming
more
now, hitting a low of
concentrated looking
$3.55
industry, and as a result would,
and
would
bouncing
in my
off the
view
lows,
actually increase
RYDE.
systemic risk and decrease market competition. Do you share that concern?
I think it's a real concern.
All of these concerns, we hope that you can commit to reproposing the Basel III endgame, and we strongly urge you to take that into consideration. With that, Mr. Chairman, I
Gentleman from
appreciate your
Massachusetts,
time.
Mr. Lynch, is recognized for 5 minutes.
Good morning, Mr. Chairman. Welcome. Good to see you again. I want to go a little deeper into
And
the
shares halted
commercial
again
real estate
at the
issue and the potential impact on regional
$2.96.
banks.
That's Romeo Yankee Delta
This
Echo.
morning, Scott Rector, who's a member of the New York Fed Board of Directors, released a white paper on CNBC this
APM
morning, describing the
at
trillions of
Forum,
dollars in commercial real estate loans that
$12.26.
will come due over the next couple of years. He described it
Halted
as a
at the highs
quote,
on a second
slow-moving
break.
train
Levels
wreck
here
Papa
over
Michael.
195 would be
and,
something.
for our regional banks. He went on to predict that it will force a little over 500 banks thereabouts to either fail or consolidate. He also described what he termed as a doom loop, where, similar to Silicon Valley Bank, when people lose confidence, when depositors lose confidence in the bank, they pull their money out and we end up in a bad situation. Now, I don't believe everything that I read or hear, but in Congress, we do tend to repeat it. And I just wanted to get a sense from you. I am seeing in my own city of Boston, we've got 20% vacancy rates in office space. We rely on that for a lot of the tax revenues for the city. But I'm just wondering your thoughts on that issue. Is there a systemic concern here, or is this isolated? And might lowering the interest rates help some of those banks? Because I hear from my developers in our area that no one's lending. So, yeah, crack at it.
Sure. So I haven't seen that report, so I can't comment on it, but I can comment on commercial real estate. So we've had a secular change in the economy, which has left office rentals in many places, office buildings demand for them is significantly lower, at least temporarily and perhaps for a long time. And also the same is true for downtown,
NKGN,
some places
Nick,
downtown retail that's
Nick,
associated with office workers.
NKGen
So
Biotech,
it's a shock to the system, and
$2.95
we've known this for
now,
some
November
time, and
kilo Golf
we've gone
November
through the
at
commercial
the
banks
highs
in the
of
United States,
230%.
and so have the other regulators. We've done it jointly and identified the ones that have high concentration and are going to need to deal with that. And so we've been in contact with those banks and talking to them about how they're going to deal with this. How are they going to absorb these losses? Do they have enough capital? Do they have the liquidity? Do they have a plan to do this? And is it consistent with their lending practices and that kind of thing? So it's going to be something we work through over a period of years. I do think it's slow moving. I think that part of it is right. You ask about 500 banks. I have no idea about that number, but certainly there would be some banks, probably smaller ones.
Ticker NKGN shares seeing continued heavy activity, new highs, November kilo, Golf November.
A manageable thing at the large banks. So I think that's what it's going to be, and it's a serious problem, and more serious in some locations and jurisdictions and with some banks than others. But it's one we'll be working through, and I think that's how I would think about it.
Does the Silicon Valley Bank situation, Signature, the money moves so quickly in those cases. It was instantaneous now. The velocity of money moving out of those banks really, I think, in some ways contributed to their failures. Are we looking at anything technologically that might be able to
should be over
address some of that or mitigate?
1385.
Sure. So we also, after Silicon Valley Bank, we got in contact with and worked with financial institutions that had high concentrations of uninsured deposits, and many of them have greatly improved their liquidity position. So that's the thing that we're working on. Okay. As you probably know, we're also working on some liquidity rules, which will strengthen our framework of liquidity rules. But that's something we haven't proposed yet.
Let me ask you something off topic. So we know that Russia has about $300 billion in
Jeez, dude.
We've frozen assets, Russian assets of about $300 billion between U.S. and European banks.
APM,
WTF.
Resuming.
What I'd like to see is us give that to
And
Ukraine,
hitting
to be honest with you. I know that's a very
$16.80 at the
simplistic
high.
idea, but I'm just
Alpha
wondering
Papa
if there's any
Michael.
historic example that
Ticker
we could look
STX
to
shares selling
if Congress
off,
hasn't
Sandy
taken
Tango
necessary
X-ray.
steps to redirect that money to Ukraine so they can feed their people and fight that war.
This whole area of sanctions and foreign assets and things like that is really controlled.
Ticker
and directed by
WDC
the
also seeing
administration,
an
by the
increase of
elected branch
activity.
government.
Whiskey Delta Charlie.
All we are is just a technical seat around, in the back row to help. We don't make those decisions, and I wouldn't comment.
I know you're big on history. I was just wondering if there was any examples out there that we
What's the
might
deal with
provide
this
guidance
STX
to us.
game?
Gentleman's time's expired. The gentleman from Texas, Mr. Williams, now recognized for 5 minutes.
Mr. Chairman, thank you for being here.
Note
When I'm back in my
STX currently
district in
speaking at
Texas,
Morgan
I'm
Stanley
constantly hearing
conference.
Concerns surrounding the fundamentally flawed Basel III. We've talked length about that today. Endgame proposal. These concerns are not only coming from my banking industry, but also from farmers, ranchers, small business owners who are concerned about how this proposal will impact the ability to access capital in the future. And to all of us, did it not raise alarms? And we've heard about the 97% today of public comments on this proposal, and they all came out negative. And Americans across all sectors are worried about the disastrous implications that will follow this proposal, and have tried to make that known to banking regulators who continue to ignore them. It's time for federal regulators to take these concerns seriously and, quite frankly, just, I believe, start over. So I urge you and your colleagues to rethink the misguided policy and do what's best for American people, small business, Main Street America, and withdraw the Basel III proposal. Now, Chairman Powell, given the concerns raised by financial institutions, again, farmers, ranchers, et cetera, and other communities across the country, can you elaborate on how the Federal Reserve is responding to and addressing these comments that are mostly negative and request modification, delay, or complete withdrawal of the proposal?
See if this $3 level holds.
Yes, it will. So we're in the process of reviewing the comments. They were quite voluminous. They were very detailed.
He's
a lot
used
of data, a lot of
voluminous
analysis, and that's
like
just what
2
we
or
wanted.
3 times now.
So we've got those, and now
It's a new
we're-
word for him.
It's a lot. It's hundreds of them, and we're going through them, and we're just at the point where we're about to begin then turning to the question of what changes should we make to the proposal. We haven't made any decisions. We haven't really gotten to that stage yet, but we're getting, remember, we only got the comments less than 2 months ago. So it's just, we're at that stage. So we're looking at it. As I've mentioned, my own view is that there will be material and broad changes to the proposal as we go forward. And we haven't really made decisions yet, though. It's just a little bit early for that.
We're glad you're looking at it. I want to bring up the long-term debt proposal rule, which would require banks to issue enough long-term debt to cover capital losses. Now, Congress worked to pass legislation requiring the tailoring of regulations to the size of a financial institution. This is meant to protect banks of all sizes and allow for families and businesses in my district to have options to meet their lending needs. So the Fed's long-term debt proposal would undo any sort of regulatory tailoring and puts into place a new long-term debt issuance requirements on regional banks, which require these banks to issue long-term debt both at the parent holding company level and the IDI level. Now, these regional banks will face increased costs when they are already facing towering regulatory burdens from this administration, and those are the banks that people do business with. So, Mr. Chairman, do you believe that this proposal rule goes against the requirements of S2155, the Economic Growth, Regulatory Relief, and Consumer Protection Act? And will you commit to exploring this issue further with your colleagues?
So we're committed to implementing 2155. We believe that the regulatory and supervision regulation and supervision of banks needs to reflect their size and activities, and that's something we'll be considering as we go forward with this.
Okay. Short time I got left. Americans continue to feel the pain from runaway inflation created by the Biden administration as everyday costs continue to stay expensive. As you know, I'm in the car business, and inflation is just running rampant in my industry. And the irresponsible and partisan American Rescue Plan forced through Congress by Democrats only made inflation more of a problem. And now American families and businesses have been forced to deal with runaway inflation for 3 full years now, which has caused some major hardships. So quickly, the ARPA injected nearly $2 trillion of deficit spending to our already struggling
Same kind of setup. Big old rip pre-market, dumpy, get going, pop VWAP, halt up, see if it's got the same script.
And doesn't this kind of reckless spending actually fuel the pressures of inflation?
I think there were a lot of causes of the inflation we've seen.
FRP Holdings
we
reported.
saw this inflation everywhere in the world. So the reopening, really the reopening of the economy after
Net income of
with very
$2.885
strong
billion.
demand and
That's
constrained supply. You
Foxtrot
saw
Memorial Papa
inflation in
Hotel.
all the advanced economies. It was a little sharper here at the beginning. I think there's a role for monetary policy in that.
30
There's a role
cents
for
in
fiscal
earnings,
policy. There's a
10.1
role
million
for the
in
pandemic,
revenue.
A starring role for the pandemic. Our job is to deal with it, and that's what we've been doing.
Well, thank you for always keeping small business in Main Street America in your calculations. And with that, Mr. Chairman, I yield back.
Gentleman yields back. Gentleman from California, Mr. Sherman's recognized for 5 minutes.
Mr. Chairman, I want to thank you for recognizing in your opening statement the importance of immigrants in keeping costs down. And I want to thank you and the administration for what has been an excellent 2023 economic report. We've got 3.1% economic growth, by far the best in the developed world. Headline inflation, 2.4%. And that's not a little blip, a 1-month number. That's for the whole of 2023 and compares very favorably with the pre-pandemic portion of the Trump administration when we had inflation of 3.5%. My goal here is to convince you to cut more and sooner because for a number of reasons. The first is that I know, if you ask a constituent, they want zero inflation and zero unemployment. You know that we can't have that and have concluded that the economy works best with a 2% inflation rate target. But I've looked at the history of that 2% number. It seems to come from Auckland from the 1980s. And there's a lot of arguments that your target should be just a little bit higher. Larry Summers recently produced a study arguing that the cost of money is part of the cost of living. So we have this weird paradox where you're trying to keep the cost of groceries down by raising interest rates. But as the ranking member points out, the big issue is housing.
NYCB, New York
your
Community
measure
Bank,
of
seeks outside
inflation
capital
seems
to
to
shore up
treat
balance
all
sheet, according
Americans
to
as
sources,
renters, even though
has
2/3
contacted
are
investment
homeowners.
firms on potential equity sale.
And so
That's
when
NYCB.
interest rates go up, that's an increase in the cost of living
That from the Wall
for
Street
anyone
Journal.
with an adjustable rate mortgage, anybody looking to buy a house, anybody with a home equity loan.
Shares dropping here now on that.
Obviously, we would cut interest rates a little sooner and a little more if your target was something closer to 2.3%. So I'll ask you, is there substantial economic analysis that argues that your target rate and the economy would work better if we had a slightly higher target than 2%?
Powell said 2% global and pretty
Not
durable
really, no.
standard.
What's happened is, you
2%
pointed out New
global,
Zealand.
pretty durable
What's
standard for
happened is
inflation.
that 2% has become the global standard. It's a pretty durable standard.
I
I don't have any reason to think that that's a problem for the
NYCB
United
share
States
is
to get to
now
2% inflation.
falling
You know,
further.
we're at 2.4% right now, headline inflation.
I
$2.90.
would ask leave to add to the transcript
Again,
of this hearing
the
numerous
bank has
articles that
seeking
argue for
outside
something
capital to shore up its
between
balance sheet
2.3 and even
and
3%. I'm not arguing for as high as 3%.
considering a
Let's look at
potential
Basel.
equity sale.
There's nothing
That's
free
NYCB.
here. If
Shares now at
the
$2.89,
standards are
down
too
more
high,
than 10%.
we lose economic
and shares
growth. If
now
they're
are
too low,
halted on
we
a
have,
circuit breaker. NYCB halted on a
bailouts
circuit
and
breaker on the way
bankruptcies.
down.
But I think everybody agrees that the standard should be well crafted. You've got a system where everybody drafting this is well dressed and focused on Wall Street. And you've got Basel rules that discriminate against Main Street and for Wall Street. I'll give you some examples. 65 basis, it's 65% if you're a publicly traded company and make a loan to a publicly traded company. You make a loan to CalPERS, they're not publicly traded.
NKGN, more highs
to put in
now.
their article into the
Shares
record.
up 328%.
And so they're in effect going to have a tougher time getting a loan. The local pizzeria is going to have a tougher time getting a loan. You've got in Basel III ignoring mortgage insurance, which obviously makes the loan more prudentially sound for the bank and is very necessary for first-time home buyers. And you've got a system where if you make investments in long-term bonds on Wall Street and you put them in the hold to maturity category, you don't have to recognize the losses and mark to market.
I note Bitcoin seeing increased activity on earlier headlines. New York Community Bank seeks cash infusion. Bitcoin near highs.
Finally, we go to clean energy investment. Can I count on you to personally look at the paradox where Basel III treats clean energy tax credits much more harshly than low-income housing tax credits for no ascertainable reason?
Crypto-related issues seeing increased activity.
The gentleman from Georgia, Mr. Loudermilk, recognized for 5 minutes.
Well, thank you, Mr. Chairman. Mr. Powell, thank you for being here today. I'm concerned with the small dollar credit for businesses. As a former business owner for over 20 years, I can attest that as the small dollar business credit becomes more expensive and less convenient, businesses are going to turn to credit cards and other alternative financing for business purchases. These inevitably result in even higher costs, which goes down to the consumer, which means that they're going to pay more for the services or the products. But in February of this year, total credit card debt reached a record of $1.7 trillion. According to Intuit Small Business Index annual report, average monthly credit card balances were 27% higher in 2023 than they were in 2019. What do you view as the driving force behind these record high levels of credit card debt?
Part of it would be growth in the economy. So that'll be part
I'll
of it.
take her
Just
NVIDIA.
simply,
I remember Victor Delta Alpha, the information reporting.
I'm not sure what that
quote
is.
from
You know, people
Amazon
had
Web Services
lots of
executive
extra
saying
cash
demand for NVIDIA
during the
chips will
pandemic
stay
from
high.
forced savings. They've spent that down. Now they're borrowing. I'm not sure.
So if there was a rule
AMZN, Amazon, and NVDA, NVIDIA, the information says AWS executive said demand for NVIDIA chips will stay high.
If you raise lending costs for banks, then at the margin that will make non-bank lenders they'll get some of that business.
And if it becomes more complex or less
AMZN
convenient,
and
then businesses will turn
NVDA.
to these alternative forms like credit card. I can tell you that from
And have,
experience. Yes. Well, I've called for the withdrawal of the Basel III Endgame proposal entirely. Will you commit to an analysis of how bank capital proposals like Basel affect small business credit access and the small dollar lending before finalizing such proposals?
I commit to that. Let me look into that. I don't want to make a commitment that I'll
KKR
undertake some big study, but we'll look at the issue.
Said
But do you
in
feel it's
talks to buy
important that
energy
we
firm
do
Encavis for
have
over
an
2 billion
understanding of
euros.
the
That's
effect
from
of
Bloomberg.
small
That's Kilo
businesses,
Romeo.
the
Feds
backbone
Daily
is the
said
bloodline
rising
of
housing
America.
costs have been a
jobs.
key
That's
driver
right.
of
I
higher
do agree.
inflation.
Okay.
Higher interest
The
rates
chairman
do
asked
raise
you
housing
for
costs
your thoughts on
temporarily.
withdrawing or reproposing the Basel III Endgame proposal. Have you specifically
but are
discussed
needed to bring
withdrawing
down
the proposal
inflation.
with
We are
Vice
committed to
Chairman
finish the
Michael
job
Barr
on
or the
price
other
stability.
governors?
Fed is focused,
So I don't want to
resolute
get into
on
our
getting
internal,
inflation down.
doings, but I will say that I understand it is a live option. Again, we're not at a stage of being able to even have that discussion yet because we're not really, we've got to decide first what changes do we think are appropriate. And that'll take a little time. And then the question will be reproposal. What I said is, when we get to that point, if reproposal is the right thing to do, we're not going to hesitate at all. It's perfectly live.
Ticker NYCB, shares resume trading, November Yankee Charlie Bravo.
In the current environment we have in politics in this country, there's not a lot that you find bipartisan agreement on, but I think you could find some agreement in withdrawing that proposal. Can you explain the importance of broad consensus at the Fed on proposals like B3E? Are you concerned with recent trends of disagreement among board members related to major proposals?
So I think we're going to get to broad consensus at the Fed. I do. I think it's very important. This is
Not sure how I
this is,
feel about that.
in
NYCB,
our
shares
culture that
resume
we,
trading.
we try
November
to
Yankee
find
Charlie
common
Bravo.
ground. And we've been able to do
NYCB.
that in the regulatory space, and I expect we will be here as well. And
So,
I'm committed to that.
Could it
Shares
be that
$2.74
we're seeing
now.
this level of disagreement
moving
because
lower
of extreme measures
and
that are
halted
being
again.
taken now that may not have been taken in the past? I mean, a total difference of opinion and understanding.
Ticker
Shares are now
KRE, Kilo
15%,
Romeo Echo. Shares continue to see
$2.74.
activity, new lows for
I
KRE,
won't,
the regional bank
I
ETF.
won't speculate, but I will point out that 4 of the 7 governors during the open board meeting at which we put it out for comment expressed real concerns, very specific concerns about the proposal, and said we would look at the comments when they came in, and that's what we're doing.
All right. Do you feel that they have validity in their concerns?
I was one of the 4, so yes.
With the few seconds I have remaining, there's a recent report of FinCEN working with financial institutions to query legal purchases made by American citizens. Has the Federal Reserve been instructed within the past 3 years by Treasury or anyone else to search Americans' legal transactions?
Not that I know of, no.
Okay.
SEC votes
Senator from
3-2
Illinois,
to
Mr.
adopt
Foster's
climate
recognized for 5
disclosure
minutes.
rule.
Thank you, Mr.
Climate
Chair,
risk
and thank
disclosure
you for
rule.
being here. As Ben remarked, there's a near-term emergency to get the $60 billion in military assistance to Ukraine. And separate from that, there remains a longer-term need for reconstruction assistance to Ukraine, which the World Bank estimates is somewhere north of $400 billion. Now, at the start of the Russian invasion, the free democracies of the world froze roughly $300 billion in Russian currency assets, primarily at European banks and financial institutions. And the Biden administration and many of our allies have recently taken the stance that those assets should be leveraged somehow to provide reconstruction resources to Ukraine. I support this concept, and I believe that additional action should be taken to ensure that we hold Russia accountable. But there are real concerns on the impact that this might have on central banking system, on the primacy of the dollar, the euro, and so on. And so my question is, have you seen just the act of freezing these assets and not seizing them, but simply freezing them? Have you seen deleterious effects on the primacy of the dollar, the confidence in the central banking system? Is there any visible downside from the act of freezing that's visible so far in the 2 years since we've done it?
I can't point to any. I can't point to any.
Okay, so that's an interesting observation when we think of taking the additional step of actually seizing them, that at least so far, because, you know, to my mind, having them frozen is as violent as, and as violent as.
Ticker
seizing
Hess
them
or
outright.
selling off for ticker
So
Hess.
it's interesting that so far we haven't seen that. Now, in terms of the Basel III and so on, there is there's a frustration I've had over the fact that directionally the effects of these are clear, but the
Ticker
magnitude
Exxon Mobil also shares selling
for
off.
example, if you
X-ray
talk
Oscar
about
Michael.
the effect on the prices seen by derivative end users of increased capital requirement. Directionally, it's clear. If you raise capital requirements, banks will withdraw from these markets to some extent. Other players
That's
will
just
step
dropping
in
hard.
partly and take up part of the slack.
Noted headline,
and
Exxon
the
files
spreads will
for
increase and so on.
arbitration to protect
Is
Guyana
the data that you've
rights.
collected enough for you to actually estimate the magnitude of these effects instead of simply the direction?
I think it's really hard to get down to the micro level and try to assess that, because you're right, there would be multiple effects. But you do know that you know the direction, you know what the sign is.
That's right, but you know, if you can avoid financial crises.
XOM and CVX, ExxonMobil files for arbitration claiming right of first refusal in Guyana after Chevron has proposed
matters a lot
merger.
when you're doing these balancing.
30
acts.
seconds on
That's
NYCB.
XOM,
And a lot of it
CVX,
depends on,
and
actually, you need a model for how the different
HES.
market players will react. And is that really not going to be in the scope of the analysis that you anticipate from the quantitative?
I believe we have done some work on that. I think the banks and other participants have done
CLZ.
work on that as well and come up with a range of
Jeez.
answers. But this is there are just an awful lot of variables in these equations. So it's hard to say with any confidence. That's why it's
NYCB, New York Community
it's,
Bank
it's
Corp,
hard
resuming
to-
again.
The job
November
of
Yankee,
deciding the
Charlie
precise level of
Bravo.
appropriate capital is a hard one.
Yeah. And now with, with 10 years. we've
Shares
had two
continuing
major
to drop
crises,
here.
With both a fiscal and a monetary response. Are there the lessons that you can learn now that, I believe, and it seems like your testimony indicates that we're
MEDS.
kind of approaching back to normal.
Trexaid,
now? We've seen,
$16.61, now up
I ticker
100%.
NYCB shares
we
resume
saw
trading.
that
November
special
Yankee
dividend
Charlie Bravo.
announced Earlier,
So
that's Michael
Meds has
Echo,
moved the entire
Delta Sandy, MEDS.
$8 that
and
they're
we
distributing.
Limited by political, political will to do things. And then, of course, you were limited by the zero bound in what you could do for most of a decade. And we had a long recovery. And the comparison, to the COVID recovery has been very sharp, and it's quite remarkably
During
put us right
JP.
back on that track. Are there
That's
any
true.
lessons that you've sort of
That's
drawn
very true. I
about
didn't think of that.
the importance of the getting the right balance of fiscal and monetary response
PLTR
to these shocks?
So we think about
CCCC Daily
that a lot,
Cock.
and I think I have to start by saying it's too soon to really tell, because the answers you would give today, the picture looks very different than what it looked like a year ago. And so, and a year from now, we'll be looking back going and saying, we've learned so much more. So I think the pandemic is still writing the story of our economy right now. And we should just be prepared to be surprised with the next chapter, as we were with 2023.
MEDS
Very
Trexaid
strong
halted
growth,
on a circuit
sharp
breaker.
decline in inflation, while the labor market remained very strong.
Gentleman's
Very few
time's expired.
forecasters had that, but we can talk about it.
Gentleman's time has expired. We'll now go to the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Senate Commerce Committee
Thank
Chair
you, Chairman.
Cantwell.
Chairman Powell,
Whoever has
thank you
that
for
Boeing
being
Senate
letter
here today
asking
too,
about
doesn't
lack of
testimony. I'd like to
cooperation
start
in
off,
737
First of all,
MAX
by
probe.
completely echoing everything.
Says she still plans to call
Congressman Barr
Boeing
said.
CEO
A
Dave
lot of us have
Calhoun
talked
to
about Basel
testify at
III
future
endgame.
hearings.
I think
That's
Congressman
BA
Barr kind of
Boeing.
nailed the thought process. I do hope you'll kind of withdraw that and take the comments you've heard from here and from so many others about the hazards with the current approach. But I'd also like to, address one of the other practices by the Federal Reserve, and it's the practice of paying interest on excess reserve balances held with the Fed accounts. It's my strong belief that rewarding banks with returns for taking no market risk actually harms our economy, and it discourages financial institutions from lending money into the economy. Instead, they park it at the Fed. This has little to no impact on very large corporations, but it can have a crippling impact on small and mid-market firms. And we especially saw this in the long recovery as Dodd-Frank was implemented in the Obama years, transition to the Trump years. We changed some of that mindset with a lot of other
There are further
policies.
comments coming from ExxonMobil
but we
VP
saw
saying that
a
if Chevron Hess
strong
merger does
surging
not
economy.
proceed, there is potential for
Our countrymen
value
pay a
for
price
Exxon
for
and
this
Guyana.
market distortion by the Fed in two ways. First, they're unable to obtain loans at competitive rates because the money's sucked out of the market. Frankly, a lot of them don't even have access to lending except through bank capital. So it forces them into other forms of capital, equity capital, and others. Second, they ultimately pay higher rates whenever they have these alternative means of capital. And so today I've introduced a prohibition on the IOER Act, which would prohibit the Federal Reserve from paying interest on excess reserves. By eliminating IOER, we can begin to return our economy to the undistorted free market economy it's supposed to have. The alternative is you could simply raise requirements. We see some of those moral hazards when you do it across the board with approach like Basel. So what's your case for why you should keep paying interest on excess reserves?
Well, as you know, we don't see the downsides that you're talking about. You know, banks have a cost of funds and they have what they can earn, and that's what really matters is the spread.
And if they wanted to do it, they could simply buy treasuries on their own, and they could do that independently. I suppose they can independently keep it at the Fed, but they don't have to buy. They don't even have to put it on their own balance sheets in the same way. They've got
ATS
immediate
has
liquidity with
hitting
Fed
a low of
over
142.74 on
overnight
that
account.
headline
So I
from
don't see how that's different than
Reuters.
what they could already do.
What I was going to say was,
regarding Exxon
banks can earn
filing
much
for
bigger spread
arbitration
by lending to
in
corporates.
the
So their
proposed
incentive to
Chevron
lend
Hess
is the
merger,
same as it always
claiming
was.
they have
This
first right
doesn't
of
affect that.
refusal.
Really, it's they have a
That's
cost of funds and they have the ability to
ATS
to
now
have reserves,
144.62
but,
off the
you know,
lows, down
they're
about
not going to, they're not earning a profit on that.
1.25%.
So-
Hotel Echo
or a
Sandy.
big one. They can earn a much bigger profit by lending to small corporates.
Well,
And
speaking of
generally-
profit, I mean, the Federal Reserve isn't officially supposed to be a for-profit corporation, but you are supposed to pay for your operating costs off of positive cash flow. And right now, the Fed doesn't have positive cash flow. In fact, the Fed has negative cash flow. So it's not entirely unrelated that the Federal Reserve operated at a $114.3 billion loss in 2023 and currently is carrying a $133 billion loss on its balance sheet this year. So it's, you know, not the right approach, I think, to be paying essentially that much out in excess reserves to banks that are holding capital in the Fed when they could be deploying it into the market. So right now, the interest you're paying banks and money market funds exceeds the income you're getting on the $7.6 trillion balance sheet assets that you have, to the tune of $133 billion asset. So, you know, effectively, the Fed is operating at an operating loss. So what's the path back to cash flow positivity for the Fed?
As you know, for many years during the QE large balance sheet period, we've contributed way over $1 trillion in net earnings to the bank, which to the Treasury Department. So you can't look at the loss without mentioning that we've been, giving effectively $100 billion a year in profits every year to the Treasury Department. So the other side of that is when we raise rates to do the job you've assigned us to get inflation under control. When we do that, we absorb paper losses. It has no effect on our operating, the way we operate the Fed. And if we retained all the earnings we have, then it wouldn't be a problem. But we don't do that. We give that money to Treasury.
Thank you. And I think the last thing is I just encourage you to halt any effort to develop a central bank digital currency. It doesn't need designed, developed, and it certainly doesn't need established. I yield.
The gentlewoman from Ohio, Ms. Beatty. Mrs. Beatty is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to our ranking member, and thank you, Director Powell, for being here. Let me start by saying thank you for the monetary report. I've had a chance to try to peruse it, and there are headings in there that says the labor market remains strong. You'd probably agree to that, your report. Let that say that's a yes. Also, it talks about unemployment rates being low by historical standards. You'd agree with that? It also states that the global pandemic played a huge role with the inflation rate, and inflation rates are on the decline. is reported in several charts in here, and also substantiated by the Federal Reserve of New York and Michigan surveys that I've read. It also talks about job gains and uses the word robust jobs. So I want to thank you for educating us on that. And Mr. Chairman, I'd like the record to show that all of this also resulted during the Biden-Harris administration of making sure. So often we hear in this committee and other committees about what the administration is not doing and what our economy and jobs look like. Now let me move on to something that's very dear to me, and want to thank our ranking member for bringing it up, and that's the lack of affordable housing, which is one of the primary things that I hear about when I'm back home. I'm on more panels to try to explain what you do, what we do, or oftentimes what we don't do, and why we have this. While I know that interest rate hikes have successfully brought down the inflation, rising rates have also had an adverse effect on the cost and the pace of housing construction and costs. Are you concerned about the effects?
No, Ticker, Coinbase shares seeing a spike in activity, new highs for Coinbase.
Financing new construction? And the second part, how do you expect to control for long-term housing inflation that might have a potential rate cuts, how it might affect that?
No, Ticker, NYCB shares
Our
resume
policy
trading.
to bring inflation down is to raise interest rates, and that works through several channels. One of them is probably the most important, is interest-sensitive spending, and within that you have housing, durable goods, and things like that. So, you know, during the early days of the pandemic, the housing industry was about to all go bankrupt, and all of the facilities that we did really supported that industry through their critical time. When we're going in the other direction, when we're raising rates, housing is definitely affected. We understand that. It's not something we want to have happen, just it is the reality that housing will slow a lot when you raise interest rates. We've done that, and we're doing it for the longer run benefit of the people we serve to restore price stability, which is beyond value for people to have price stability. We get it that in the near term, that's higher rates, that's fewer sales, people are locked into low rate mortgages. We get all that, but we got to do this because it'll benefit the country and people in the longer run.
And I have a great appreciation for that. But also when I go back home to the district, what I hear a lot from agencies and individuals who work with advocacy groups, that the effects of interest rate hikes are not borne equally to all American households. So we hear that. And there's no doubt that low income and minority communities are hit the highest or the hardest by these monetary policy changes. Black households and business owners have historically faced challenges with home ownership and access to capital, and they're disproportionately impacted by the rate hikes. Does the Fed, do you have anything that you could help me with this dilemma and how we can better achieve economic goals in a more precise and equitable manner?
So I think it's working. You see inflation coming down, and that's why I do think it's likely at some time this year, if the economy, proceeds along the path we expect, that we will begin to reduce rates. So that's really the path that we're on, and I do hope it works out that way.
And when you say, I don't have a lot of time, but when you say economy, what does that mean? Helping poor people and Black people get more jobs, more money?
So our forecast is for continued strong growth, continued strong labor market with wages going up, and also with inflation coming down. So that kind of an economy.
Okay, my time is up. I yield back. Thank you.
The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman McHenry and Ranking Member Waters, for holding this hearing, and thank you, Chair Powell, for being with us today. I'd like to start by discussing the Independent Automated Teller Machine Owners or Operators section of the Bank Secrecy Act Examination Manual. I want to ensure that financial institutions will not be discouraged from providing banking services to the independently owned ATM industry. In 2021, you made it clear that the industry does not automatically present a
That's good.
higher
That's
risk
good,
for
dude.
illicit
Powell said
finance.
it's likely
I'd
sometime
like to
this
know
year,
what
if economy
efforts have
evolves, that
been
we
made by
expect
the
that we'll
Federal
begin to
Reserve
reduce
to fully
rates.
communicate that position to
That is
financial
Fed Chair
institutions
Powell.
across the country.
I will have to get back to you on that one.
All right. Thank you. Well, and so I might just add, listening to independent ATM operators over the time that I've served in Congress, I've come to understand that unfortunately, and it was in the bank examiner's manual up until just about a couple years ago, these operators were identified as being extraordinarily risky, and that was causing them to be debanked.
370.
That's your
We hope that
GameStop
you'll
share
take
seeing
a
a
look
spike in
at it,
activity, new highs. Golf, Michael Echo.
to financial institutions and most importantly to the regulators. Chair Powell, Tennessee is home to over 1,000 foreign-based businesses that have chosen to invest in our state and create more than 160,000 jobs. These jobs are reliant upon cross-border financing provided by global banks, including foreign banking organizations. The Federal Reserve has long maintained the principles of national treatment and equality of competitive opportunity when regulating foreign banks and assessing them based on their U.S. operations. Are you still
NYCB.
committed to these principles?
Yes.
And how will these principles
Shares
be
continuing to sell off
reflected
here now,
as you move to finalize the
$2.18.
Basel Endgame
Chuck, it's
proposal?
freaking halted, dude.
We have
On that
received a
report
whole
that the
separate
company
set of comments from the foreign banks, and we'll look at
is
those,
looking to,
very much in that spirit.
on a
and,
potential equity
make
stake and
appropriate
seeking
changes.
outside capital.
Thank you. Chair Powell, the Basel III Endgame will incentivize firms to transfer credit risks off their balance sheets. One avenue for such a transfer is synthetic securitization, the framework of which must be approved by the Federal Reserve. However, it is my understanding that there is a substantial backlog of reviews and approvals of these securitization frameworks. It is concerning that the Federal Reserve is directing the risk transfer, yet also impeding it, in my view. Can you comment or can you commit to reviewing this approval process and taking steps to reduce the backlog of pending securitization applications?
So as I understand it, these transactions are becoming popular right now. There's a lot of appetite to do them. And we're not stopping them. We're just being careful because, there were similar things that happened about credit risk transfer during the global financial crisis that didn't actually work out. So we want to make sure that these structures really do actually durably transfer. And we think that they
Broke
do,
$2.
but we just need to be careful because
Damn, I got out
the last
way early.
experience with these was difficult back in the last crisis. So it's just something that we're not intending to slow these down, and I think we'll try to get through it.
Is it a lack of available resources to apply to the approval process, or is it an intentional slow walking to make sure that every I is dotted, every T crossed?
I don't actually know, but I do, what I heard was, what I have been told is, we're not stopping these, but we're going to be careful with them and just be absolutely careful that they really do transfer credit risk in a durable, kind of sustained way. And
I'm
the
just
thing. I don't
looking.
think the
I'm
intention is
just
to go slow
looking.
to have a backlog. And so I don't know what the staffing issue is.
Just
we'll
wanted to
check.
see.
All right, thank you.
wanna
As the
see
Federal
who's
Reserve
moving
continues
things.
to consider proposals designed and debated in Europe, such as Basel III, has the Federal Reserve's Supervisory Climate Committee or the
Can't believe
Financial
the KRE
Stability
is actually
Committee had
holding up
any
a little bit.
discussions regarding the adoption of ESG risks in capital requirements?
I don't know.
Has there been any discussion in other committees regarding the adoption of the ESG risks in capital requirements?
Any discussion, I really don't know. Let me say that's not something we're considering, but when you ask me any discussion, I don't know.
It's not a priority
to
in
put
capital
it-
requirements.
To put it mildly, yeah.
Okay. Thank you. I see my time is running out. I appreciate your answers and any further light you can shed on those matters. I'd appreciate. I yield back, Mr. Chairman.
The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, for being here today. I want to start just with following up on the exchange you had with Mr. Sherman. As I think you know, I led a letter with 106 of my colleagues with concerns about specifically the clean energy tax equity provisions in Basel. I appreciate your commitment to look at that. I wonder if I could just put a little bit of a sharper point on it. can you look at that before the rule is finalized and potentially issue some sort of an addendum to the rule? The concern I have is the number of banks who are a little bit frozen right now, waiting for some clarity on that. And I'd prefer we not slow down the rate of clean energy investing in our country if we don't have to.
I don't know. I mean, I think there's a proposal, and we're well aware of the commentary, and we're going to react appropriately. I don't know that we can pull one thing out of line and deal with it. But we're
Well, I'm not saying it
making
would
good
drag it
progress,
down.
and
I'm
I
just
think
saying
we'll be
other
back,
banks responding.
reasonably
If one
soon
bank's
with
in
some
trouble,
answers.
Okay, well, time is of the essence. Appreciate
I would
it.
imagine others are.
Second thing, good thing about going late here, you get to follow up. I want to follow up on your discussion with Congresswoman Garcia here. I really appreciated your comments in the 60 Minutes interview last month when you mentioned that immigration is a big part of the story of the labor market coming back into balance. Now, generally, and correct me if I'm wrong, more immigration is generally going to ease inflationary pressure. Is that all else equal? Is that a safe characterization?
It's probably closer to neutral, actually, because people come in, they also spend, so it's not clear that immigrants coming in, they add to GDP.
Fed's
Okay, so
daily
either we're
said
going to get economic growth
policy
and or
in a good place. There's
Right,
more
so
work
there'll
to
be
do.
more workers,
Encouraged,
so
we've
that
been able
might-
to bring
wages
inflation
might
down
go
with
up a
labor
little bit
market
less, but at the same time,
solid.
they're also spending. So
We're on a
we had
path
this
to bring
conversation.
inflation down as
It
gently
depends
as
on
we
what you
can.
assume, but I think it's better to just assume it's sort of broadly neutral from an inflation
Okay,
standpoint.
so I guess, and maybe you've answered the second question, but given as you all are using the Census Bureau data that is more conservative than the CBO data, and obviously we're all making estimates in the future. Can you speak at
NTSB
all
to
to
hold
whether your
investigative
forward
hearing into
views on
Boeing
economic growth and
737 MAX
inflation, how
9 mid-air
sensitive are they
emergency?
to your assumptions about that census versus CBO data on what the actual level of immigration is to the country right now?
I think the CBO assumptions are meaningfully higher and would affect growth and would be part of the explanation why growth was strong last year and would be a reason to expect. I mean, it's not the main reason, but it would definitely add to growth this year. And I wouldn't say that we accept one version or the other. We're studying, we study the CBO numbers carefully. We're just trying to get to the right answer. But I mean, I think the CBO shows, and they say so, stronger growth, higher growth, more people. I don't know, the per capita growth goes up, but the absolute level of growth goes up.
Okay. Last question. I think there's a lot of good news in the monetary report that you all just issued around wage growth. We've seen, the lower quartile of earners starting to close some of those historic gaps. We've seen minority groups and women start to close some of those gaps. What I didn't see, and I don't know if this is because you all haven't done it or I just didn't read closely enough. Have you seen any gaps regionally within the U.S.? Are there parts of the country that are seeing stronger wage growth than others?
There are. I don't have that off the top of my head. I want to go back and if I can when I talked about immigration, I think that the immigration story for last year was part of the positive supply shock and was part of the reason why inflation came down. I was really asking the question over the longer run.
Fair enough.
And there, I think it's more
Fair enough.
be neutral.
I appreciate that. I want to just close on this regional piece because the Atlanta Fed, which is the best there's and you look at which regions are consistently running above. I think that New England and the West are consistently showing wage increase above average. And the West, South, Central, Texas, Oklahoma, Arkansas.
Programming note, NYCB, CNBC covering news now on CNBC Live.
Wage growth below average. And I appreciate you're not going to wade into a political question here, but those are all right to work states where it's harder to unionize, where it's harder to organize. And what I'm wondering is, without asking you to opine on policy, have you all at the Fed done any analysis that says, as we look at when there are gains in labor productivity, does that gain in labor productivity, is it more likely to accrue to workers in those states where there's a stronger union presence, easier to organize, and more bargaining power for labor as opposed to capital?
My guess is there's plenty of research around that area, not necessarily at the Fed, but we'll take a look and come back to you.
Okay. All right. Thank you. I yield back.
Gentleman's time has expired. Now go to the gentleman from South Carolina, Mr. Timmons, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being here today.
NYCB.
We continue to appreciate your work and the work of the Federal Reserve on behalf of the American people. In August of 2023, the Federal Reserve, FDIC, and OCC released the NPR requiring the issuance of long-term debt for Category 2, 3, and 4 banks.
$1.76.
As you may know, I, along with many of my colleagues, authored a letter to each agency expressing
just got
concerns regarding the lack of
obliterated.
tailoring in the proposal and shortcomings in estimating the actual cost of the proposed rules. I'm concerned that these shortfalls will negatively impact lending in my district, and when combined with the other ongoing regulatory proposals, could cause further consolidation of the banking industry. It appears that the Federal Reserve has primarily deferred to the FDIC concerning the proposal. Could you shed light?
Feed just dropped.
The other agencies are, and right now we're looking at the comments that we've gotten. That comment period, I believe, has closed. Yeah, and so we're very.
They pulled the plug. Wow.
Consumer Protection Act.
Feds
Instead
Daily
of applying
said
tailoring principles,
holding on too
this
long with
proposal creates
rates
Category
could
2, 3, and
create
4 financial institutions
unforced
identically for the purposes
error
of long-term
for
debt
economy.
issuances. Additionally, the proposal
economy,
unduly
that's,
burdens
from the
Category
Feds Daily.
2, 3, and 4 banks by requiring them to issue long-term debt at
San
both the
Francisco
parent
Fed
holding
President
company
Mary
and bank
Daly.
level, which actually could be viewed as reverse tailoring, considering GSIBs are only required to issue debt.
We are
at the
waiting and
parent
watching the economy
What
to
is the underlying
fine-tune our
rationale behind this
decision-making.
dual requirement, particularly when such a mandate is not imposed on our largest banks? And do you believe that this represents a tailored approach as required by the statute?
So that tailoring question is one of the questions we'll be asking ourselves as part of our review of the comments.
Thank you. It's my understanding that Category 4 banks were not included in the original advance notice of proposed rulemaking for the long-term debt rule released in the fall of 2022. Is that your understanding as well?
I didn't catch that.
Did the advance notice that was released in the fall of 22 include Category 4 banks? It's my understanding that it did not.
I can't confirm that, to be honest.
Well, I think that's something that you should take
Light
into
ass
account
volume
because
up,
the
big
Category
ass
2 and
volume
3
down,
banks
and it
have had
doesn't
an
go into a
initial
piece
year
of
to
shit.
foresee this
MMs.
challenge, and so
Frickin' let
Category
it
4
go.
banks are really behind the 8 ball. And yeah, so I guess my next question is, do you believe regulatory agencies should provide smaller regional banks longer than the 3-year phase-in period to meet any final long-term debt requirements?
It's a good question. That's one of the comments we've gotten, and we'll be looking at that.
I appreciate. I just think if we're going to impose these new regulations, giving everyone the same opportunity to comply with them is something worth considering. I guess one final question: if these proposed regulatory changes had been in effect prior to the fall of SVB and Signature, do you believe the outcome would have been different? Because honestly, I don't think anything would have changed.
It's a hypothetical. I'm tempted to say that if there had been more long-term debt there that was specifically there to absorb losses.
They were nowhere near being solvent, but I guess that's something I think y'all should take into account, whether if these proposed changes to our system that are designed to make it more resilient would have actually caused SVB and Signature to have a different outcome. Because again, it just seems that my colleagues across the aisle let no crisis go to waste. And these are changes that would not have in fact prevented
NKGN.
the calamity that they are justifying the changes based on. Thank you
Share
for
is
being
at
here
$4
today. And with that,
now.
Mr. Chairman, I yield back.
At the highs of
Gentleman yields back.
350%. November
The
Kilo
gentlewoman
Golf,
from
November.
Massachusetts, Ms. Presley, is now recognized for 5 minutes.
NYCB, New York Community Bank, resuming.
Due to the Fed's aggressive interest rate hikes, mortgage rates have surpassed 7%, rising to
And
20-year
halted
highs, leaving many
now off
credit-worthy
the
and
lows at
mortgage-ready home
$1.86.
buyers without a path to home ownership. This is a problem for everyone. It's an urban issue. It's
Best
a
day ever,
suburban issue.
Hilo? Let's go,
It's a
bud.
rural issue. Chairman Powell, I welcome the decision of the
Jeez.
Fed to pause rates at the end of last year. But for families in my district and across the country, that is not enough. We need the Fed to start cutting because, like the rent, interest rates are too damn high. Chairman Powell, you've previously indicated that the Fed may cut rates this year. What would you expect the impact of lowering interest
she
rates
just
to
summon
be on the housing market specifically,
the rents are
including
too
the
damn
rental
high.
purchase and construction market?
So we know that higher rates, of course, have slowed down the rate of activity. So if at such time as we start
She's
to
freaking
lower
dropping
interest
memes.
rates, housing market will pick up broadly across new
dropping
home
memes on
construction,
these
new
guys.
home sales. The number, as you know, many households are in very low rate mortgages, and they really can't sell because they have to refinance into a high rate mortgage. That'll go away over time. So ideally, the housing market would go back into a more normal phase, but one with lower inflation in the broader economy.
Right. So just to further reiterate that, interest rate cuts would have a great benefit. Just yesterday, actually, I met with a number
Gabe
of
dropping
representatives from state
facts
housing finance
on 'em.
agencies from throughout the country. And they were talking
New York
about the
Community Bank
barriers
is now
to
halted
affordable
for
housing
news.
projects, given the current interest
Uh-oh,
rate
halted for news.
environment. Obviously, higher interest rates have
NYCB.
raised costs for affordable housing
Oh, boy.
developers, and many of them have chosen to
boy.
slow down or halt construction entirely. So fewer homes are being built, which means fewer people are being housed. So given that which you agree, so given that we already had a massive shortage of affordable housing supply prior to the pandemic, when interest rates were
NYCB
below
shares
2%,
halted on
the
volatility,
current rate,
and that hold changed to
5.5%
news
rate,
pending
has been
for
devastating. And the
November
price of
Yankee
homes
Charlie
across the
Bravo.
country have remained stubbornly high. It's clear the current state of our housing
WDC 's
market is
hiding
impacting
now.
everyone and disproportionately hurting those who need stability the most. Does this concern you?
So our job is to do price stability and maximum employment. We don't target the housing market. And
Sorry, just
we're doing our jobs. That's what we're doing. It's not something we want to see, but
does this
is
impact
the
on the
path to
housing market?
restoring
But
price
does
stability.
it concern you, Chairman Powell?
Does it concern me?
Yes,
It would
fewer
cons-
homes are being built, so fewer people are being housed.
This is the job we've taken on.
All right, well, it concerns me greatly. Chairman Powell, the Fed's interest rate hikes have not been sufficient in addressing housing inflation. Do you agree that we need a more robust fiscal response to increase the supply of affordable housing and to lower costs nationwide?
So we don't take opinions. We don't express opinions on things like that. I will say that there is a structural housing shortage in the United States, and that's really the longer run problem. The problem with high interest rates is a short run problem. The longer run problem is lack of supply.
Well, that's why it is critical that Congress pass legislation and appropriation bills that will make those necessary investments in housing for all. Given the way that Ranking Member Waters fought for $150 billion investment in housing and Build Back Better, I know on this side of the aisle that my colleagues and I are ready and waiting for the Republican majority to take housing inflation seriously. Housing affordability is the #1 issue I'm hearing about from my constituents. Families in my district and throughout this country need relief now. I truly hope the Fed will listen to them and cut interest rates. Thank you. I yield.
Gentlelady yields back. The gentleman from South Carolina, Mr. Norm, is recognized for 5 minutes.
Thank you, Chairman Powell. I think other people have noted about the crisis in the office building market across this country. That's a line of work we're in. I can tell you it's real. I can tell you the buildings that are effectively vacant, it's going to have an effect on the taxes paid. It's going to have an effect on rents. As far as affordability in housing, the rates are one thing, but my good friends on the other side of the aisle don't realize that housing has got over 200 components to it. One of the biggest is gas prices. And as long as we're buying gas from countries that hate America and don't manufacture our own, housing isn't coming down. I don't know how you define affordable anyway. It's going to continue a downward slide. And I'm from a state in South Carolina that people are moving in. And we're not going to have the housing starts that we should have because of the policies of the Biden administration, which is train wrecking this entire economy. On regulations, on Regulation 2, which is has the guardrails for credit card fees, how do you answer and I know the caps, you're looking at adjusting that.
how do you answer the charge that this is
NTSB
really
Chair Homendi expects to hold
should not
investigative hearing
be-
on Boeing 737
you're
MAX 9
getting in the way of
toward the
banks,
end of summer?
charging fees according to what
according
their
to an
costs
interview?
are? How does the regulations affect that, particular regulation two?
Is this a Fed regulation we're talking about, or is
Yes,
this the CFPB regulation?
This is, for my record, it's the Federal Reserve has finalized the routing and restrictions and proposed tighter and adjusting the price caps that currently exist. Is that not right?
It doesn't ring a bell with me. It may well be right. I'm not familiar.
If you
with
could
that.
look at that, I know
will.
all the credit unions and banks have got some concerns on that.
I will come back to you on that.
Okay, I appreciate it. Do you need a letter from us or?
No, we'll come back to you.
Okay, thank you. CRA, for those of us who have been involved with banking for a long time, the regulations, having a clear set of standards that we abide by and know where to put the money to. When should we have regulations out that we can read about what's going to be acceptable and what's not?
Sorry, I didn't get your question.
The regulations on the changes in regulations for CRA.
Right. What about it? I'm sorry, I missed your question. What was the
When are the regulations going to be out that we'll know, the banks will know what's acceptable for CRA and what's not acceptable?
So the final rule, of course, is out. I think we're working on, there's a lot of work to do. The requirements don't really kick in, most of them for a couple of years at least. So I think we're working on the follow-up regulations.
Okay, that's really important for all the banks because they want to make sure they qualify and where the dollars are spent. They need to make sure that it's going into the right spot because the credits won't be applied unless that's it. The Fed now, where the Federal, I think, Reserve launched and is operating this now. How is the participation rate going with that?
Slow, real slow. It's early days. There are network effects. These things they go slow until they don't. And it was the same way with ACH. You may remember back in the day.
Right.
So we're at fewer than 500 banks are in there now.
Senior U.S.
We're working
official
away at it.
confirms at least 2 sailors dead in Houthi
We
attack
expect
on
it'll take
freighter.
some time,
True
but
confidence in the Gulf of
but it's
Aden.
there, and we think it'll be beneficial. We had a lot of support from smaller banks to build it, as you know.
Is the pricing below cost?
I don't believe so. No, not longer run cost.
Okay. Okay, that's all the questions I have. Thank you for being here.
Gentleman
back.
yields back. The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
I want to thank the chairman and the ranking member for this hearing, and to you, Chair Powell, for appearing before the committee to discuss the recently published monetary policy report. As we continue our work on behalf of the American people, we have to keep in mind that our mission here is to grow the economy from the bottom up and the middle out. It seems as if there has been a constant series of shocks to the economy, both domestically and globally, and yet we can all see just how resilient the labor market has been as it has maintained its strength. With a robust gain of 353,000 jobs, the January numbers are a continuation of the trend that Democrats in Congress delivered through historic investments in our workforce, putting people over politics. In light of this relative economic strength, I really want to implore the Federal Reserve to take stock of the holistic economic picture before making decisions on monetary policy, and to pay particular attention to those communities that have been historically left behind during times of accelerated recovery. I want to add to the questions from my colleague, Congresswoman Presley, Chair Powell. At a time where it has become increasingly difficult for working people and people of color in particular to purchase a home, I worry that rising mortgage rates will put working families even further behind on accessing the wealth and equity that a home provides. So what actions, if any, is the Federal Reserve considering to better understand and to mitigate the impacts that your Basel III proposal may have on minority borrowers who disproportionately rely on high LTV mortgages due to the generational wealth gap that persists?
We've received comments, including many on the mortgage changes, and we understand the concerns, and we're looking very carefully at that. have made any decisions, but, we will announce them when we have.
Are you concerned that these shifts in risk weights will reinforce the decade-long retreat of banks from the mortgage market and push more originations to non-bank institutions?
That's a question that people are raising, and it's something we take very seriously, and we'll be taking that into consideration as we decide about that change, that recommended change.
Could you discuss why you feel it is necessary to include new requirements around operational risk in Basel III in
Is this
light
gonna go?
of recent claims that it will significantly increase the cost of or prevent banks from offering altogether necessary services
They
such as
broke it by a
underwriting,
penny. I don't know, man.
investment advisory, or insurance?
That is one of the concerns that's been articulated about the proposed changes to operating risk.
Maybe it goes.
We take those concerns seriously. As I mentioned, we're in the middle of looking at these things, and then we'll soon, in the process of turning
Kind of getting extended on the
to the
Momo.
question of what changes to make.
Well, I just would
A lot of
underscore
follows
the
today.
sense
Thank
of
you,
urgency, 'cause
Jan,
the longer
Mayor
there's
Leach,
uncertainty
MF
in the market,
Pidgey,
it creates
Isorek,
really
Saha, the great
negative effects to end users, which are all of our
Game account?
constituents who are
Lame,
looking to see these
Sid Meier,
costs come down. Let me shift.
Deep Cheese.
This Congress, under the leadership of
Big
Ranking
effing
Member
Jaco.
Waters and former CBC Chair Joyce Beatty, I've made it a
Some name I
focus
can't
of
even
my
say.
efforts to educate
An
my
eater?
colleagues and the public at large
A man
on the
eater.
far-reaching
Oh.
benefits of increased diversity in the
Crackle
workplace,
fat?
in our boardrooms,
Sixter?
and in society as a whole. Despite
Serious?
the efforts by some on the other side to
See
take
the
away
truth?
the very tools of economic
Ask a
opportunity
slapper?
that
Nice.
create inclusive work
Raw
environments
lung.
and
Let's
improve
go, bud.
performance,
And there's your break.
there has been
Son
a
of a
really
big hairy
misguided
dingo.
assault on everything from diversity, equity, and inclusion to other programs following the aftermath of the Supreme Court's ruling on affirmative action. So Chairman Powell, as you know, your Office of Minority and Women Inclusion has a focus on this. So as we anticipate the upcoming release of your annual report on inclusion, would you be able to speak to the necessity of collecting this data that minority and women-owned businesses are included in the board's contracting and acquisition opportunities?
I do believe we collect that data and we monitor that very carefully.
And why is it important?
Well, I think diversity in the
This thing's
workplace
juicing
is
pretty
an
good here.
important thing, and you won't know how you're doing unless you measure it.
And just as the McKinsey Institute released in their Diversity Matters Even More report, companies that have more diverse management teams actually outperform companies that don't. That goes to the bottom line of our economy, and I wish my colleagues on the other side would stop their assault on diversity, equity, and inclusion and actually work with us to grow the economy
Gentleman's time
for
to
everyone.
expire. The gentleman from Wisconsin, Mr. Stiles, now recognized for 5 minutes.
Thank you very much, Mr. Chair. Thank you for being here, Chairman Powell. Appreciate it. You're navigating a difficult situation where we've had stimulative economic policies from the Biden administration, in particular, excessive government spending, investment in infrastructure, specific tax credits. At the same time, we're seeing a regulatory environment from the administration that's also restricting economic growth. We've heard a lot about the Basel III Endgame, which you have a chair of in your opening remarks. You noted that high interest rates are impacting business investment in a negative way. High interest rates are also negatively impacting the housing market. As we look at Basel III Endgame, I've heard from a wide array of stakeholders, from those that are commenting on increase in bank capital standards, the negative impact that would have on the housing market, as well as from the business community, the impact that would have on their ability to invest in capital infrastructure and increase employment. Does the broad diversity of voices who hold concerns on the Basel III Endgame concern you?
I would say that I've articulated concerns, and we're reading those comments, and we're very much in the process of assessing what we need to do to address them.
Thank you. I appreciate your time on that. Shifting gears slightly, as you may know, the Securities and Exchange Commission held an open meeting today to approve the final climate change rule. It's a significant regulation that I think would have a significant impact on the economy. Can you comment how the Fed thinks about the economic impact of this new regulation or regulations
Again,
more
New York
broadly,
City Community
in particular
Bank
their impact on both inflation
shares
and
are halted
unemployment?
for pending
We don't
news
comment
now.
on regulations of other
That
agencies.
earlier report
And you'll review that if it's put in place, or you'll
from
review
the
the
Wall
economic
Street Journal
impact
that
as
the
the
company
empirical
was
data comes forward?
considering
We're not in the business of scoring.
Issuing
I mean,
equity.
CBO does that. They'll look at this and make a careful assessment of the economic impacts and budgetary impacts and that kind of thing.
Thank you. I'll shift gears again. One of your two mandates is to maximize employment in addition to maintaining price stability. As you know, government hiring has accounted for a large share of total job creation. More than 600,000 public sector jobs were created last year, and the federal government now employs nearly 3 million workers. So when you're examining employment data, how does the Fed view the impact of the public sector employment growth relative to private sector economic growth? In other words, how do the two data points factor into your assessment of how the broader economy is performing?
So the jobs are jobs, right? But I think we would tend to look at private sector jobs to get a better assessment. Private sector job creation is a better indicator of kind of the private sector momentum in the economy. But we look at both. I mean, they both count.
Does the dramatic increase in the private sector number of jobs give you any pause or concern as it relates to?
You mean in the public sector?
In the public sector. Sorry if I misspoke. Yes, the public sector.
The truth is the public sector was unable to hire at the beginning because wages went up a lot in the private sector at the beginning of the pandemic inflation, and public sector can't respond to that. So there's some catch-up hiring going on there now. Now that things are settling down to normal, I think there's some catch-up hiring. I'm not
Powell
sure
said the pace
it's
of
an issue
public
we're
sector
concerned
hiring
about.
is not
Okay.
something the Fed is
I'll
concerned
shift
about.
gears in my final minute, just to talk a little bit to get your perspective on the macroeconomic developments that are having an impact on our monetary policy, specifically as we think about the potential for a productivity boom from AI to work at home to other factors. The data is probably too early to tell whether or not we're having a true productivity view, but how does the Fed view the adoption of some of these new technologies, in particular AI, as it relates to labor productivity?
So everyone's looking at AI for that question, and
Powell
it's hard to
said
say,
artificial
actually.
intelligence's
We've
impact
had
on
really nice
productivity is hard to
in the
say.
last year or so, but it's probably still very much affected by the post-pandemic factors that we're seeing. I think we need to see more to understand whether
Good
there's a
call.
longer
Good call,
term boom.
Chief.
AI certainly has the
AI
capacity
certainly
to
has
either
capacity
augment
to
labor
augment or
or to
replace labor.
And that's a key
Not
question.
sure.
We really
Dude,
don't know.
Chuck is
which of the
ahead
two
of
will do.
my
one
feet
it will
again.
do.
Money being invested in it, so it's likely to drive significant productivity. I would say right now technology, but also higher labor mobility. A lot of people quitting during the really tight labor market, and also the rise in startups. There were a lot of people started companies.
Powell
during
said
the
there is
pandemic.
hope
Those
that
are
current
the kind of
productivity
things
gains
that
will be
do add up
sustained.
to higher productivity over time. So there is hope that we'll see some productivity out of this.
Thanks for your comments today, Mr. Chair. I yield back.
Gentleman yields back. We'll go to the last questioner of the day, the gentleman from New York, Mr. Torres, for 5 minutes.
Thank you, Mr. Chair.
MEDS,
Mr. Chair, I have several
Trexate
questions
Health,
about
$19.39
some of the most common
at the
complaints that
high
I've
of
heard about
132%
Basel III endgame.
now. Michael Echo
I have an
Douglas
open mind
Sandy
on the
Moorheis
subject, but I
now
want to hear your
on
response
Trexate
to
Health.
some of the arguments that have been leveled against it. First, the Fed has repeatedly reassured the public that the banking system is well capitalized. Yet the Fed is advancing Basel III on the assumption that the banking system is undercapitalized. So the first question is, how do you reconcile the Fed's repeat assurances about a well-capitalized banking system with Basel III's assumption of an undercapitalized banking system? The second question, if the purpose of Basel III is to align US banks with their banking peers elsewhere in the world, why is the Fed imposing requirements that are more stringent than those prescribed by Basel III? In other words, why is the Fed, quote unquote, gold plating? The third question is, how do you reconcile Basel III's recommendation for standardization with Congress's statutory requirement for tailoring? Standardization would seem to be in conflict or in tension with regulatory tailoring. And the fourth and final question, do you think that Basel III could have the unintended
MEDS
consequence
hitting freaking
of
20.
reinforcing the trend toward shadow banking, which would mean less regulation, not more? Is there a sense in which we are transferring risk from the regulated sector of the financial system to the deregulated sector? So I bombarded you with 4 questions, and I'll give you the time you need to answer them.
I'm going to have a hard time reading my handwriting here, but I'll start with yes to the fourth one. I'll give you that.
Well,
one
we'll have two
because,
ways to play
that is
it.
clearly
The
a risk.
KRE and also
we've seen,
NYCB.
Intermediation activity moving out of the regulated system, and this has the risk of doing more of that.
Okay,
So what was, in a word or two, what was the one?
they
again?
all do.
Just you said, and you testified and
capital, yeah.
repeat reassurances about the capitalization of the bank.
So I addressed this in my remarks in the open board meeting. You know, higher capital is always going to add to safety and soundness, but there's a cost.
Right.
So identifying the precise right level is very, very difficult. Hard to do it objectively. I've said for years in these rooms that I thought that the level of capital in the U.S. banking
That's
system
right,
was not
Soils.
right.
Go find you some
So I
treasures.
opposed- And I voted
Treasures.
for all these increases. So I think it's a very fair question.
I think, well, 100% will
one
resume.
was-
If it's good news, it's certainly going to.
Concern about gold plating.
About
Gold plating?
Oh, gold plating, yeah, no. it is, and I said this
resume
in my
today. They need
public
to recover
remarks,
that stock price.
We're exceeding the minimums with this proposal, and we also exceeded what the other big jurisdictions are doing, and so that's a question. That's a good question. I'll agree.
Okay, great.
And the third?
And the third is, I think you more or less, and standardization versus tailoring.
Standardization of, it was something.
Yeah, so Congress passed a statute requiring regulatory tailoring.
No, that's an
And do you
excellent
think
question.
Basel III is in
I
compliance with
addressed
that
in my
statute?
comments too. I think you're right. We do need to take on board the lessons of Silicon Valley Bank as it relates to the smaller, large banks, but we don't need to throw away the tailoring that's required by the law, but also that is appropriate if we're going to have a diverse banking system.
You know, the collapse of SVB was largely a story about liquidity risk and interest rate risk, yet the focal points of Basel III are credit risk, market rate risk, and operational risk. Like, what is your response to the criticism that the Fed should focus its energies on addressing the forms of risk that were responsible for the SVB bank failure rather than focusing on forms of risk that were largely unrelated to it?
So I agree with that, but I would say we are working on a package of liquidity measures which directly addresses the Silicon Valley Bank situation. We've also taken a lot of supervisory actions with other medium and small sized banks that had a lot of uninsured deposits and a lot of real estate risk and things like that. So we've been doing quite a lot on the supervisory section that it doesn't require new rules.
And then finally, as you know, the crippling cost of housing accounts for a third of inflation. One of the most powerful tools for producing and preserving affordable housing is the low-income housing tax credit, which has financed nearly 4 million units of affordable housing. The banking system accounts for 85% of LIHTC investments, and there's a concern that Basel III, in its present form, would diminish the availability of LIHTC and the amount of affordable housing development. And so I'm just curious, is that on your radar, and is that something you're willing to examine?
Yes, it is.
So with that, I'll leave it at that. Thank you.
Gentleman yields back. That's the final questioning of the day. We committed to the chair that would be done with a hard stop by 1 p.m. It's nice when we can honor our commitments. So I'd like to thank Chair Powell for his testimony today. Without objection,
Powell
I'll
ends
five
his
legislative
appearance
days
before
in which to
Congress.
submit additional written questions for the witness to the chair. The questions will be forwarded to the witness for his response. I ask you, Chair Powell, please respond as promptly as you possibly can. And with that, this hearing is adjourned.
Okay. Cock Daily.
SWIN halted at the highs on a circuit breaker now. 3960 Solomon Holdings up 98%. SWIN.
Yeah, there's so many things moving right now.
Final trades on CNBC, SLG, PLTR.
PLTR, final trade, huh? Bitcoin getting a little juicy here. PLTR mooning on that CNBC mention. Jeez. Wow. STR, I'm sure that's doing fantastic. You were long, JJ, when that hit? Oh my gosh. Way to ride that 50 cent. Well, next time a company does a special dividend, we YOLO the entire account in it. If it's sub 5 million share float, we YOLO. I can't tell you what to do. But apparently that's the move. Be for an indefinite amount of time today. Pooskies, it shouldn't be. It's halted for news. So typically they'll release the news, whatever it is, probably pertaining to the Wall Street Journal article. And then shortly thereafter, they'll release the stock. It'll be open today, more than likely. Whoa. Panthers acquire Vladimir Tarasenko from Senators for 2 draft picks, with Ottawa retaining 50% of the salary. Wow. Panthers going balls deep. Tampa needs. I'm really starting to not like Julian Brisbois, our GM, JBB. Last year he gave away our entire year's worth of draft picks for one player, and that one player, not worth that. Florida Panthers give up 2 draft picks for an elite score. That's how you do it. Swin. Oh my gosh.
SWIN resuming. Sandy Whiskey India November after a halt. KCLI, Kansas City Life Insurance, reporting $5.07. Kilo Charlie Lima India.
Don't tell me you're a Panthers fan.
Revenue $186.4 million.
PLTR, 1 minute cock.
SWIN now halted again on a circuit breaker. Sandy Whiskey India November. Resuming and halted. 45.69, up 128%.
It's kind of crazy. They got a $170 million Titan contract with the military, yet the stock price is up $6 billion market cap worth. Little disconnect. Just a little disconnect. Even I'm a little like, you got tickets, Lil Prost? You going to the Coyotes game? I feel for the Coyotes. They got a shitty ass logo, shitty ass environment for an arena. I feel for you. You have Wild tickets? Nice. That reminds me. Should give an update on fantasy hockey, shouldn't I? All right, here we go. We are in the playoffs. First round is now over. Each round is 2 weeks long instead of the normal 1 week. Mighty Cucks defeated Freezing My Kucherov 943 to 904. Zach's out. Zach didn't make it. Zach did not make the playoffs. He was close, and then he fumbled right at the goal line. Zach, I think, had to win a big game, and he forgot to set his lineup one week towards the end. Zach has been eliminated. He's out. Right. Jeez. Anyway, Mighty Cucks beats Freezing My Kucherov, and Shred the Jane, a.k.a. The Moose is Loose, is out with his loss to Kirill, who, at the buzzer, as his name foretold, Kirill Kaprizov gets a hat trick to put him over the top. Otherwise, this game was neck and neck into the final day. Like, a couple points difference. Now we have Texas Squids coming out of his bye week, playing Kirill, and Lord Jock coming out of his bye week, playing the Mighty Cucks. First 2 days, my team has severely underperformed. I will say that. And I'm not looking forward to it. That Wild game had 3 hat tricks in it. Did it really? I didn't realize that. So we shall see. We shall see. Loser bracket going on. Kucherov hasn't set his lineup. He needs to, because you could still make your money back in the loser bracket.
Feds Daily said policymakers are resolute, thoughtful, and data dependent.
We'll see. I think he win his buyback. Maybe not. Yeah, he can. What is this? Oh my God.
Sit down, little baby, you're not a bull like me.
Who said this?
I love you, SJ. Oh, you guys. NASDAQ, Dow Jones, swing trading. Sit down, little bit, you're not a bull like me.
Broke that 90 level. And the cooler gets in. It's that crazy volume that set it off yesterday. Okay.
Coming up at 2 p.m., the Beige Book, Fed's cash carry at 3:15.
Ticker NVIDIA shares seeing a spike in activity, new highs, new all-time highs for NVIDIA.
Letter T, AT&T is launching the Navigil Wellness Wristwatch in the U.S. Letter T.
Really? I don't feel like that was a great call. No, I'm gonna get
Ticker Zillow shares seeing a spike in activity, new highs for Zillow.
it's the 1 minute. $30. Got it. NVIDIA senior unsecured rating raised to triple AA3 from A1 by Moody's. Jeez. All right, potential W. That wasn't that cucked, right? Nope. AMAM, proof shareholder acquisition. Right, that's a cuck. Let's see if it rebounds immediately. Hmm. $75 switchers, jeez. Five minutes 43. Maybe not ready yet. Yes, it is. Because SJ's out. Big. See that price can rebound. Pretty good. Let's see if we hold up again. Setting up a 5-minute AISP for a VWAP break could be a pretty juicy pop. Saw what this one could do.
U.S. State Department said the U.S. will continue to hold the Houthis accountable for their attacks. Said on the death of 2 sailors in the Houthi attack, this was sadly inevitable.
Pretty damn tight here, boys. This is now 3 inside candles on a 1 minute with a 5 minute 3 inside candles. Pop or drop time. Back. 3. Jeez, dude. 23 break would be a 1 minute cuck. These levels are the 5 minute levels. 33 would be a minute cuck.
Intel CFO at the Morgan Stanley Tech Conference. Most of the top 20 foundry customers are running test chips with the company. That's India, November, Tango, Charlie, INTC.
I don't know if I made money on that trade. Want to get it filled in on these. Not bad. Made $35. On 2,000 shares, I made $35. How? Eggs is that bad? Damn. Well, got the volume spike. Did not get the follow through. Watch the cuck here. If it comes down to 723, breaks this. Can I short this? This would be an epic short. Let me make sure. Nope, can't borrow it. Fucking course. PLTR has some levels. 456 reverse. Bullish. Well, it already broke out. The problem. So that's the problem now, is you kind of broke your level and VWAP and didn't do anything with it. So now if you're a bull, you're thinking, oh crap, we didn't break out. This comes down to be like a 720 break. Gonna look like a 5 minute failed candle over candle on the 5 minute, and then you're just gonna all up into this. We'll see though. Still has time, but that's not a good first move. How's it cuck and go? Okay. Good volume. 65. It's a level above 76. These freaking fills, man. Three times of that 70. Oof. No, gonna get a dip before we move. Good volume.
Macro note: S&P futures seeing a spike in activity.
Whoa. What's that about, boys?
YEXT, Yext. Company out announcing their Q4 results, full year results. Not seeing those numbers as of yet. YEXT.
Pretty brutal move there. The old markets. Not seeing anything. Oh gosh. AESP just broke those levels to the downside.
MEDS, Trexaid,
Jeez.
more highs now, $21 on Trexaid Health. That's Michael Echo Delta Sandy, $21 at the highs. Shares are up about 150% now. MEDS.
Meds has just got a mind of its own now. It's up over the $8 that it's giving away. That means when the dividend comes, it will crash 8 plus.
S&P futures falling here
Should.
from near the highs at 51.13.
Apple just get freaking wrecked, man. Play it. What are we looking at here? It is time, isn't it? It is time.
market crashed on me, but that's not my last, homie. It ain't over for me. It ain't over for me. The market crashed on me, but that's not my last, homie. Only one logical thing to do. Don't trip by the dip, 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 by the dip. Don't trip by the dip, 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 by the dip. Don't trip by the dip. Get my chips and dip. Hot on coins and watch me flip. In and out, I'm stacking pips. Market looking bearish. By the dip, 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 by the dip. Don't trip. Sour cream and onion dip. Scoop it with some ruffle chips. Sink 'em like Titanic ship. Bartender,
Show it.
here's a tip. Crypto face is the truth. He can even show you proof. This is market cipher school. Rory made you say, ooh, wish I had one too. Making plays on trading view. Waiting on a blue triangle. I just call it Blue's Clue. Portfolio diversified. Keep my balance classified. Scared to look, you terrified. But when you did, you almost died. It was all good before you went to sleep. Woke up to a surprise. Couldn't believe your eyes. Where the hell did your money go? You like, oh my God, what the fuck happened? Bitcoin dumping in my sleep. Woke up to a market sweep. That's the reason I don't sleep. Keep my eyes on the prize. Bought some Hex and Cardano. Fear of missing out. FOMO, that's a no-no. Yeah, I know, bro, but I still do the shit. I'm just trying to hit a lick, so I think I just might buy the dip, buy the dip, buy the dip,
That's
buy the
book
dip,
map,
buy the
for those that
dip,
don't know
buy
what
the
that is.
dip, buy the dip. Don't trip, buy the dip, buy the dip, buy the dip, buy the
It's a
dip,
visual
buy the
representation
dip,
of
buy the
trades.
dip, buy the dip. Don't
Bubble
trip,
form.
buy the dip. Get my chips and dip. Hot on coins and watch me flip. In and out, I'm stacking pips.
basically,
Market looking bearish.
your
Buy the dip, buy the dip, buy the dip,
ask.
buy the dip, buy
This
the
is
dip,
bid
buy the
down
dip,
here.
buy the dip. Don't
is
trip.
price
The
action.
market crashed on me, but it's not my
hits
ass,
green
homie.
bubbles,
Time to rise
hit
up out
ask.
the flames
Red
like a
bubbles are in the
motherfucking
bid.
phoenix
How
flying
big the
high
bubbles
in the
is, how
sky.
big the
And I
bubble.
motherfucking mean it. Put it all on the house. I can't help it cause I'm
Those are trade
greedy. Got a
orders.
family, gotta feed it. All my followers, man, they need me. We can all get rich together. Talk about financial freedom. BTC, ETH, XRP, that's a threesome. Three-way. Blockchain tokens got your boy really eating. Cryptocurrency is a gift from God. All praises to the most high. Help me beat the odds, playing smart so I don't get wrecked like you pencil next. Way a crew, call me Spider-Man the way I spider line. Until we position, then I exit trades right on
Keep
time.
moving back
Might
up.
tell you a secret, but I'll never drop a dime. Favorite pastime, sitting back, watching candles climb. If they go the other way, keep calm and don't trip. By the dip, 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 by the dip. Don't trip. By the dip, 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 by the dip. Don't trip. By the dip. Get my chips and dip. Hot on coins and watch me flip. In and out, I'm stacking pips. Market looking bearish. By the dip, 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 by the dip. Don't trip. It ain't over for me. 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 It ain't over for me.
It ain't over for me. It ain't over for me.
HCM acquisition popping here on very light volume, Hotel Charlie Michael Alpha.
Apple a good buy right now? Man, it's been a long time since it's been outside of the Bollinger Band for a couple days. Golly, I can't even remember the last time that's happened. Not even through here. Oh, here, I guess. But this is like full candles outside of it. Pretty extreme. People acting like the freaking thing's going bankrupt. I would say the range of support is 165 to 170 in this range. you're pretty damn oversold here on your Stokes. That doesn't mean much. Could stay oversold. Keep going. RVSN's getting interesting. Maybe not. I don't know. By the dip, by the dip, by the dip. Market's puking here. want power to the end of next week. German power plant. Tesla having a pretty bad year. More, thank you. AI. Either NYCV related trap. Okay. Trying to cleaner is here. This thing rolls. Hunter McCullough here. $600. Not too bad. More importantly, stop the red streak. I think there's going to be some setups come 3 o'clock, but I don't want to wait around an hour for that to happen. I think RVSN has potential over 370-ish area, basically VWAP break. Market's kind of freaking me out a little bit here. I don't know. Plus, yeah. I've been on Sea Cheese. You got on around 9. I've been on since freaking 7 a.m., 6:45, really. So get on my level, Cheese. I'm very tired. That's why I'm getting off. Very tired. You guys are awesome. Thank you for all the new follows today. Jeez, I don't know where you guys came from, but there's a lot of them. Appreciate it. A lot of new subs, a lot of gifted subs as well. You guys are awesome. Always supporting the channel, supporting our community. Love it. Be back at it tomorrow. If you're a new trader or have any questions or comments, old trader too, it doesn't really matter. DMs are open. The currency that you exchange my services for are feet picks. My kid. Anyway, see you guys tomorrow. Peace out.